And you know what I do when I test? I go, yeah, and then that's it. And if it's not loud enough or too loud, I keep saying yeah until it's loud enough, and then from there it sounds good. Does it involve a feline companion? Oh my god! So you just cut the internet for everybody in your apartment, in your complex? Oh, nice. That sucks. Oh, that fucker. You got to get some of that like goo that you got to get that goo that tastes terrible, and then just start putting that on like your cords and shit that have to be out. No, no, not super glue. No, well, I mean, okay, maybe, but like the just like there's like they make this goo. It's called like apple bitters or something, and you just rub it on shit. And it just tastes awful. And so when your cat tries to chew on some shit, they'll be like, "Gross! This tastes bad." Well, how's he pulling on it with his teeth? Oh, that motherfucker!
Like the Roomba will go and eat my cords and run off with them.
That
And sometimes it like sucks the whole cord up, so I don't even know the Roomba's stolen it until I go to like clean the Roomba out, and I'm like, oh, that's my cell phone charger.
You know what? You know what your place reminds me of, Gherkin, in a weird way.
What?
Have you ever seen Big Daddy?
Probably not.
It's got Adam Sandler.
Yeah, that's probably why I haven't seen it.
Uh, Dude, I honestly like I just I rue the day that you get hit with someone showing up with a kid that's not yours, but you're like, this is my kid now.
Oh God,
But you're just like super bachelor, and so the kid like fucks shit up, but then you just put newspaper on it to hide it.
this is what you're gonna do when you move in with me, isn't it?
First thing we do when I move in is I'm gonna barf right on the floor. Big old barf too, like huge barf. You're like, how did you have that much shit in you? Then I'm gonna barf
Nice.
again.
Double down on it.
Oh fuck yeah, dude! I'm gonna have so much cereal and milk and shit, and just like just the weirdest things.
Ew. Lucky Charms. Lucky Charms and
Oh
heavy cream.
yeah, Lucky Charms and heavy cream. Maybe I'll give it some blue food coloring too to really freak you out.
I can hear through Discord. Okay.
This is all a sound check, guys. Am I really quiet? If I am, Dirk sucks.
You might be. Say something?
Something.
Okay, yeah, I think you're good. I think you're good.
Luth says I'm quiet. Willie says we're quiet on YouTube.
Okay.
Dude, Willie, when you say 30 dB, you're making it sound like I am extremely, extremely quiet on YouTube.
We're gonna be
Okay, we got some
we're gonna be
smoke in this thing. Okay.
launching a thing too while we're up here.
Yeah,
Wait,
yeah, there's stuff.
where the fuck is Jay Fresh?
He's probably got a couple of kids who are just like fueled by pure Disney World hype that he's trying to deal with right now.
Well, I'm gonna go with yeah because at at 8:30 he was like, "When is it?"
Right. Yeah, no, his kids are still running around the place. He hasn't been able to feed them their Benadryl PB and J's yet.
Yeah. How does one make that? You just like, do you just cook the Benadryl down till it's like got a nice jam-like consistency?
No, you just
'Cause
crush it into a powder, then you sprinkle it into the peanut butter and mix it up. You have like one jar with the special lid on that tells you this is the sleepy peanut butter.
my Benadryl was always liquid.
They make, dude, diphenhydramine tablets. They're fucking everywhere, dude. The little pink tablets.
Yeah.
Yeah, you just crush up like 30 of those things, put them in with a tablespoon of peanut butter, and then give it to your kid and have them trip the fuck out.
Jesus Christ. 30? That's...
You do not want to give your kid 30 diphenhydramine tablets.
That's
I'm
more
pretty
like
sure that
a...
would actually kill them.
That's more, yeah, I was gonna say, that's more like a permanent nap.
Yeah. Well, it'd be a crazy trip too. I mean, I've had 3 on accident before, and even then I was seeing like weird black spots like darting around my vision.
I think some people are more sensitive to that shit than others. I used to have an ex that would take like a Benadryl when her allergies got bad, and she would just turn into a complete wacko for like 8 hours until it wore off. Like
Oh,
talking to
geez.
herself and like standing in corners of the house like a shitty Japanese horror film.
Grackle, you know what? How about you fuck off? Okay, if I want to feed my kids Ambien and Xanax to make them shut the fuck up, then that's my thing,
You
right?
just have to get it approved by a psychiatrist first.
Yeah, for me, right? And then I'm the adult,
No,
so I
no,
know
no,
how
no,
to.
no, no, no. You just get it for them. They love giving kids that shit. This is 2025. They're like, oh, your kid's a problem? We'll give them some Xanax.
Bunch of Ritalin and Xanax, bro.
Aren't you a little hyperactive?
That was me, dude. I swear to God, dude.
Here's
The teachers would not shut up about that.
here's some lithium. Go chill out.
This will mellow you out. Uh, I'm sorry, Grackle. One of my favorite things to joke about is being literally the worst parent possible, and so sometimes my sarcasm takes me to the point where it's like, I'm gonna say some things that if a parent actually did this, they might actually be the worst human being on the planet.
I remember being like 12 years old in ninth grade, or just turning 12 in ninth grade, and they started giving everybody Ritalin. It was like right around the time where like Ritalin became popular to give to your children.
I must have been like 5 or 6 around this time. That was when I started getting the Ritalin recommendations too by my parents' account.
Yeah, it was around like 2001, 2002.
Yeah, yeah, definitely. I was definitely getting the remarks that I should be medicated around that time. I think it was like this whole thing where it was like Ritalin, it helps spazzy kids. Fucking
Yeah, that's when they started
real
putting
weird.
everyone on it. And
Yeah.
I remember like all of my friends just getting real weird.
Oh, dude, yeah. I mean, at this point, like amphetamines are the number one drug of choice by anybody who's not hooked on opiates, dude. Like, I mean, you think about gamers, okay? So let's say you're a competitive gamer and you have a stream and you've got like, your 10 viewers and you're like you're trying to hit the big time, right?
Okay.
What are you going to do to improve your performance?
Sounds like my
You're going to
stream.
take you're going to take a fuck ton of amphetamines to improve your focus to try to be a better gamer.
Weren't you already on the amphetamines? That's why you decided to be a pro gamer?
Maybe a little bit of chicken and egg right there, huh?
Yeah, I think so.
Yeah. Yeah, I'm not gonna downplay amphetamines because when I take amphetamines, they definitely mellow me out, but I'm not prescribed amphetamines, so I don't take them very often.
Did you see all the bot pits coming into the downside at the end of
You
the
see the
day?
market?
Yeah,
You just see everything?
it's just it's just yes, bounced overnight. Like
Oh
hard.
yeah, okay, yeah, overnight bounce, but that just means that by the time the European markets are getting ready to close, it's going to tank.
Probably.
But yeah, no, everything looks weird. I don't know how else to put it.
No, that's really a valid assessment.
Like it's like we're there's this it's very clear that the market is not very comfortable pricing in what it feels like it needs to price in.
Makes sense.
So there's this wet blanket, and now there's this wet blanket of charm, like over the next week. That's going to be just absolutely devastating. If Bulls can't turn this around, like I'm buying like idiot calls like every day and holding them for a little bit when we get some support. Like on that bounce, I bought some like fucking 55, 85 calls and I held them for like an hour because and they ended up closing flat because it was just like if that bounce actually did what they needed it to do, we would have gone like 56.25.
Yeah, I know. I keep doing the same thing.
Yeah, it's like at some point it's just gonna fucking print like crazy.
I
But
just have
like
like
the
a
thing
big
is it might
stack
not.
of I have like a big stack of out of the money, like 50 wide debit spreads that I just keep rolling down every day.
Yeah, there you go. I mean, yeah, it's like the the amount of move that needs to, unless it's getting hedged off. So I'm like discounting a bit of that, but like even so, there's something like a 6% move to the upside that needs to happen in the next week.
Yeah. Not even the next week. They have like 3 days.
Or what's going to happen
Because if we're
is,
still under 5,700 by like middle of next week, the fucking charm is just gonna crush everything.
dude, they're going to try to hedge it off. It's going to be gnarly. Like they're going to hedge it off on like short dated shit and try to just like absolutely just smash short-term volatility as hard as they possibly can. And if Trump says anything dumb, it's going to go so poorly.
Yeah, We're gonna
That's what they're, you know, that's what
we're
they're
gonna
going
end
to
up
do.
like
They're going to
Vana
take this.
squeezing.
Yeah, no, exactly. They're going to like that's the only thing you can do at this point is just crush the ever living shit out of that near dated vol.
Yeah, it's kind of a mess.
Yeah, so I'm hanging on to my put, and then I'm buying idiot calls, and then closing them.
I feel you.
What a weird time. You know what though? I mean, at least it gives for some good content, right? The last like 2024, dude, was so fucking boring. Like by the end of it, the Sunday streams, we were just sitting there like, what do we even talk about?
Yeah, I know. Well, even like the first couple of months, I got kind of excited the first couple of months of this year once we started doing that like weird gappy chopping
Yeah,
from like mid
yeah,
December. That was pretty cool.
yeah.
Because I was like, oh, this
That was right
thing's
around when I got my put.
yeah, this thing's fucked. And then it was in fact.
Oh yeah, that was fun. Whoa, whoa, whoa! Prince Peach Fuzz is talking shit about microwaving quesadillas. Let me tell you something. When you want some cheese and tortilla and you want it quick, there's no quicker way to get it than a microwave.
Not like a hot pan.
That takes like 5 times as long.
How?
It takes 5 minutes.
Hmm. Yeah, but
What
like
am I gonna do with the cheese stick?
the product is edible versus whatever you end
You
up
see,
with.
your and my standards of edibility are very different.
Dirk, if I ever see you microwaving a quesadilla for the rest of your, from this day forward, I'm giving J Fresh your bip.
Gammastrike office is opened and
You can
wherever.
you
And
can you
I'm in the break room microwaving a fucking quesadilla.
goddamn. I will lose it.
Uh,
Our break room's gonna have a full commercial kitchen.
if it does, then I'll actually be like. I mean, it'd be fun to like make bread with you guys. That'd be fun. Except for J Fresh is gonna come in it, but I don't really care.
He's definitely gonna stick his dick in your perfect.
Oh yeah, yeah.
Yep. Yep.
I'll be doing the focaccia and I'll be like, it needs to have holes poked in it, and he'll be like, I got the perfect needle dick for it.
He leaves behind like a little olive in each dick stamp.
It's the perfect little. It's the perfect little cavity to
I
to
don't
slip an
own
olive.
I don't own a microwave because they're for trugs.
I own one, but it's also my stove like exhaust fan.
Turk is poor and doesn't have an induction stove. I don't have an induction stove. I do have an induction
I have a
burner.
gas. I have a gas stove.
It is a gas stove. I mean, it takes like 3 minutes to make a fucking cheese quesadilla. You don't need to
Look,
use a microwave because you use a microwave, you just end up with a piece of like leather with slightly warm cheese sometimes in the middle.
look. I am a huge fan of chewy textures.
It's disgusting.
If I'm not working for it, then what's the point?
Why don't you just like pick some gum off like a tree in the woods and chew it?
What's to say I don't? It's free gum, bro.
God damn it.
All right, welcome to Office Hours, everybody. Do we have any actual questions? Oh wait,
No.
Gherk, did you say we were releasing something?
Yeah. Yeah, we have a new. Well, it's not new for the beta people or unknown, but shark fin, ooh haha,
Wow.
is going to be made available for everybody. That's our new Dex and Gex scanner. That's correct. Ooh haha. Here,
Wow.
let me pull this up for people and I'll share it.
Yeah, do it. Yeah, all you subby boys, go on there and fire it up. See what you think. Is it already released?
I
Hope
don't
it is.
know. I haven't heard from
Where,
Nuclear.
where's our resident half man, half computer, Nuke?
He's half man, half office chair fabric.
It's true.
Let me try to get this popped up on the boom. There we go. Nice. Alright, so I got that working.
But get it up on the Discord too while you're at it. I got it. Your CPU. If your CPU is not dimed right now, we need to get it there real quick.
I mean,
There we go.
the only functional issue with my computer is the 16 gigabytes of RAM that TradingView is using at any given time.
If you saved your tabs, you could close it.
You know what I've done? It's propagated the Gherk's Wiener thing, the Monte Carlo simulation, out to all like 30 ticker tabs that I have open for some reason, even though it's just
Jesus
supposed to be
Christ.
running on SPX.
Oh my
It
God,
uses so much RAM.
dude.
Oh
You
shit!
need to like. It's like.
It is deployed. It's on mine, and I still have the low tier. Jen's got it, and Nuke just DM'd me.
Fuck
Okay,
yeah.
so
Everybody.
everybody's got this now. This is Sharkfin. Dork.
Everybody who's in here, this is the requirement for this lecture is for you to have Sharkfin open.
You're just supposed to say ooh ha ha.
Oh, ooh-ah.
There we go. Um, and what this lets you do is you can choose a look back period from anywhere from 1 to 180 days. And you can choose percent or notional values of DEX and GEX, and so you can look at total exposures in the options market for any equity or ETF that you happen to, or index that you happen to be looking up, and that should give you some good information about the changes in those option markets, and you can sort and filter them. And we do a little tricky math. We multiply things by -1, so that the DEX values make a little more sense from the negative naive assumption, and so you don't have to worry about converting those in your head. And basically, what you can do is if you want to find a stock that's starting to build some maybe some bullish interest, you could look at like Gamma. Over the last 3 days, you see Nvidia pops up here, and Nvidia's been picking up a little bit of positive gamma over the last couple of days and moving up. You might have been able to catch that early as it went positive about 2 days ago. And that could have, helped you see that people were positioning bullishly across that options chain and maybe gotten in early on the bounce. Things in the market happen to be just a little fucking bearish right now. So
just a smidge.
yeah, it's a bit of it's a bit
well, I mean,
it's a bit
more puts.
it's a bit
It's gone
lopsided,
really well.
but
So usually that has more data, but it appears our cloud provider decided to upgrade our nodes.
oh,
So yeah, I guess a note on this. It's like technically it's a little tricky. We kind of have two options. We can return, you see how you're getting different results each time.
yeah,
So all of our nodes went down at the same time as they rolled our cluster.
Okay.
And so each, yeah, Need2's right. We got Azured big time. Yeah, so how it's built right now is when that particular instance gets the signal that it can load its cache, it will do so. If you make a call to this endpoint to fetch that data, it will return what is cached so far. So results may be a little intermittent at first. It's
okay.
give you a little bit or
they're
block it.
They're still loading.
Yeah.
Okay.
And I think I need to look into
Oh,
something.
there we go.
here.
Yeah, it's starting to load more. Yeah.
Yeah. So it's kind of the lesser of two evils.
There it goes.
The other one would be don't service the request until protect our load time and don't service the request until it's there. But that'd be kind of shitty. So kind of with the route of, we'll give you what we have at that time. But for the other 23 and a half hours of the day, it'll be a complete data set regardless of the instance you hit. So if people are wondering.
So basically what he said is if you don't see anything, just give it a few minutes. And if you still don't see anything, give it a few more minutes and then complain.
Yeah. Basically.
Yeah. And it'll be around our reset time for our daily data. That's when we'll be triggering getting that data in there. So
cool.
Yeah, that generally happens around 6:45 to 7 p.m. Eastern.
Yeah.
Right around there.
And somebody needs to make a fiery meme of the Finding Nemo scene with shark bait and just slap the exposure scanner in there. Yeah, but that's all I wanted to share. So we got that turned on, got it deployed to prod.
Yeah, looks like
and
it's
that's
working.
why we're seeing what we're seeing.
Fuck yeah, Nick.
Well done.
Nope. Dude is a monster.
Only on the weekends.
And then you can do the same with Gamma and look at build ups and near term positioning. Notional seems to be weighted very heavily between Boeing and Nvidia right now for the last couple of days. But if you go out to percent based, sort by Gamma, you can see that some things are starting to pick up quite a lot of Gamma over the last couple of days. T. AA, Boeing, FLS, Gold. Gold's been on quite the hot streak. I think Gold went over 3 today, right?
Yep.
Yep.
Broke 3.
Yeah, Gold's killing it. So yeah, you guys can mess with this. I hope it helps you find some stocks whose options chains are diverging from trend. It can also help you find longer dated things if you want to look out a little further. And you want to see options chains that are kind of growing, more organically over time as bullish interest is picking up on them. You can look for options chains that have been largely abandoned by participants, and that could be a good place to find possibly some value if you're willing to wait for the conditions to improve. It may be a sign that a stock is maybe a little, or being a little underpriced by the market. Can we vote to remove Dork? Absolutely not. There's no voting.
Can I be a mod
You're
really quick so I can time
you're
popcorn out?
you're a duke. You can't. You know that there's no voting.
Yeah, there's not a vote. Can I just be a mod really quick so I can time them out for like 30 seconds to 6 hours?
You can't time out pigeonholes.
Oh, fuck.
They're immune.
Ugh.
No repercussions for pigeon whales.
Why would you do this to me? So Gengen wants to see about SPX. This really like it doesn't have a like it's a scanner, right? So this, you might see SPX show up here, but if you do, that's going to be pretty interesting, right? You'll probably see it somewhere in the middle if you're going to see it. So
I mean, after OPEXs and stuff, SPX will probably pop up on this with like big changes in the gamma or delta, rather.
yeah, you're definitely right on that.
Yeah.
So, well, yeah, you can click on anything that you see on there, and it'll take you to I think it takes you to the Greeks page.
7 days. Man, Boeing's getting a lot of bullish interest.
Well, yeah, I mean, war is bullish.
Dude, it almost fucking broke gamma neutral today.
Yeah.
Fuck.
Deregulation and war, that's like the most bullish thing for Boeing that I've ever heard.
Yeah, actually. They don't care about tariffs, right?
Oh, fuck no, dude. Well, who cares about that? Let's not talk about that.
You just charge 30% more for your planes.
Exactly. It's the government buying them, so who cares?
We got Plato coming up here.
Hi, Plato. Is that a... Wait, hold on. I have to know, is that a play on words like Plato, the philosopher, or do you just eat Plato?
No, it's not a play on words. It's just my play account that I use for options trading.
Oh, I see.
With Plato. He means it's Plato, Dork.
Yeah, I get it.
Okay.
He's like molding it around and eating it.
Tastes like cornstarch.
And salt.
Yeah. I remember.
I
I remember being like 3 years old and I made a hot dog and a bun. And then I just bit that shit. And it was the worst experience ever. It was like stuck on the inside of my teeth and it wouldn't go away. And I was crying. I was crying. I was like, I called my kindergarten teacher a bitch, or preschool teacher. I was like, you need to brush my teeth.
Sorry, Plato. You got
No,
a
it's
question
fine.
for us.
Anyway, what's up,
I think
man?
I think I'm misunderstanding
Probably.
the two live chart. Yeah, the live charts.
Okay.
So if you go, let's go to the first live chart, like that one where it calls out. So like, let's say today at like 1:30 or something. What I noticed was delta and gamma flip were like, I don't know, just pretty tight. There was about a 5 wide spread between the two of them.
There's like no spread between them.
Right, but then if you went over to the other live chart,
Yeah.
and you looked at the bar graphs, delta didn't become positive until like 585.
Okay.
And then
So
gamma's like always at that flip. So is that not like, because I was assuming the delta flip would actually be
Gamma's not always at that flip either, but I'll let Dork handle this.
Yeah, I'm catching what I'm smelling what you're cooking here, Plato. So when you look at this live data with the DEX and GEX flips, those are cumulative measurements. Okay. So by cumulative, I mean that we're taking all the contracts, right? And we are figuring out essentially where, the delta or gamma in a naive world would turn positive or negative.
Yeah, these aren't just like the middle points of the positive and negative gamma and delta. Sometimes it ends up there, But this is where the market maker's exposure to delta or gamma are 0.
So
Right.
what can you read into that though? So that I mean
So here,
that's
yeah,
really
let me
interesting, right?
yeah, so go back to the other chart, Gherk.
Yeah.
So when I look at these other charts, personally, I think Gherk does the same thing. Let's look at something that's a little more esoteric. Okay, just for fun. So let's look at Vana. Okay. So Vana looks like it's if we were looking at this, we would look at Vana and say, oh, there's not much Vana going on here because spot price is right where it looks like it's 0, right? The reality is that the net Vana is the sum of all those bars, right? So that's the way you have to think about that. When you look at like gamma, right, it's the sum of all those bars. So, you know, if you wanted to try to come up with an extrapolation from this chart that relates to the other chart, you have to sort of do a little bit of napkin math in your head. And that's where the net values, that's why we like to show the net values. That's where they come into play, right? Because you can sort of really quickly kind of stack them all up and see, like, oh, is there a lot of positive or negative gamma? If we look at speed, right, and it's pretty similar to Vana, right? But you look at speed, you see that there's a lot of positive speed to the downside and some positive speed to the upside with that little bit of negative speed. So you'd be like, okay, net speed is pretty positive at the money. And those numbers with like those bars will change with spot price and with positioning changes and everything. But being able to quickly net those out is important. And then understanding the derivatives themselves too will tell you how those bars will change with spot. Speed is a lot more complicated, but things like gamma, the gamma of contracts rise as spot approaches the strike. You delta, as a contract gets more and more in the money, delta rises or drops to positive or -1. So knowing how those bars will change will also give you a little bit of an edge on how to anticipate the change in those net exposures. It's going really deep, and you don't need to do that much work on this stuff. But this sort of tells you, like, okay, what strikes is like charm concentrated on. So you see that crap ton of negative charm way up there, right? If you see that charm up there like that negative charm exposure, you could position around it, something like that. That's really big. But also you could say to yourself, if we broke that strike, right, all that charm is going to go to 0 and then start flipping positive as spot crosses that strike. So that's if you want to try to interpret these charts and make a connection between the two, like the live chart with the price action is definitely a cumulative measurement. And these are looking at where that cumulative measurement, where those values are concentrated.
Yeah, it's also not strictly the same calculation.
Oh no, it's
Yeah,
there's a lot of stuff that happens, but like yeah, that's the gist of it is essentially that.
So would a correct interpretation be so like that final push where they were trying to get over gamma flip? If you were looking at the other chart, you could still see they had like, I don't know, like 40 strikes of just negative delta, like all stacked up in front of it, even though they were in a positive gamma environment. It's a pretty low probability for them to actually continue that uptrend because it's just resistance all the way up.
Actually, if
So
they'd
what you would
gotten
have
above
seen,
the delta flip there, you would have started to see that or that delta turn positive.
Okay.
And that
yeah,
would have driven the cover bid on the MM side, because at that point, had we broken just like, I don't know, at the time it was like $1 higher, I think. I think the high was 553. Yeah, it was like $2 higher. If we'd broken that, the MM would have been positively exposed to delta,
Okay.
which changes the environment you're in, regardless of what delta is on the strike at spot. The MM's exposure to delta would have flipped positive. So
yeah, and so
Okay.
if you're looking at
that's kind of I think where you're getting confused here, is that you're looking at like the total notional amount, like notional value of the Greek at the strike, and then this is looking at the aggregate exposure for the MM. And those could be two completely different things. Sometimes you'll see like gamma's usually pretty tight because gamma's so high on 0DTs. So usually like where gamma flips positive on the chart, it's also where like gamma kind of flips for the MM. But not always. Sometimes it'll be like $5 or $10 apart. Like you'll have a couple strikes of positive gamma before the MM's exposure actually moves positive.
Mm-hmm. So
And the same is true for delta, but generally delta's further off.
Yeah, so I have an assignment for you, Plato. My assignment to you is when we're trading your delta or gamma flip, just check out the Greek spy strike on the nets, and I want you to take note. Like, let's say we're testing the gamma flip. Take note of where like the net gamma is, and you'll notice that roughly about half of the gamma is negative and half of the gamma is positive that you see on the chart, roughly speaking, because there's gamma that's not on that chart, because we're trying to show you out the money important stuff, but it'll shake out to be right around half and half. So that's
Okay. Yeah, that
and
makes
that's
sense.
it's because those bars change, right, over time with spot and with positioning.
Yeah, and if you went
So
further out of the money today, you would have seen that there was like huge, like this looks small because end of day and everything collapses,
it was huge.
but there was massive sold put positioning, like down here at 75.80. There was massive positioning at 54.50, like so south of 50 or 45. I guess 5,500. South of 5,500, there was like another 40,000, 50,000 sold puts. And those you're not seeing on here, right? Because
Yeah.
you're just looking at spot, and they're so much further out of the money, but they still have a ton of gamma until expiry. So intraday, as those
Yep.
are sold, they're pulling that gamma flip down. But you're not going to really see any significant change at spot, and so because those are looking at every strike,
Yeah.
not just the ones that you can see in your like 25 strike view.
Yeah, okay, that makes sense. So then
It-
another question on the Greek Express strike page.
Yeah.
So if you went on Delta,
Mm,
say if you got off the net and then, or not even got off the net, if you as you were on the net, you saw so spots 55.50, and
yeah.
then you start seeing, I don't know, 55.35 flip from negative to positive or something. Is that
That's
more than
prob
likely bulls trying to build position underneath it as support to
that's
push
pr-
up,
that
or
yeah, that would probably be like what bot calls. Oh, it could also be bot puts.
It would be so
Oh. uh,
it would be
so you're above the
sold
35
puts.
strike? Yeah, sold
no?
puts.
Yeah, you're above the 30. So it's beneath the spot, like a delta strike is flipping from negative to positive.
Yeah, delta, not gamma.
It would be
Dork.
put volume increasing, I
Yeah.
think. Oh, wait, no, delta.
Yeah, it's delta, not gamma. You're thinking of like sold puts bot calls being negative gamma.
I'm just thinking of the assumptions we're making on the 0DTs and how it would cause that delta to go up. It could also be, I mean, the thing is, it could be volatility too, right? Like there's so many things at play that could be happening. I mean, if volatility on a strike rises and it happens to have a certain amount of OI and puts and calls, the delta will change.
Yeah, yeah.
So
I'm thinking if you're
so it could
seeing
be
it
several
move
things.
from negative to positive really rapidly, though, you're probably seeing something like bot to close. Like
Yeah,
you're
because
probably
IV
you're
is
probably
increasing.
seeing like sold calls bot to close. But I mean, you can get a more granular view of that by looking at this and seeing which side's
Yeah, I
moving.
can. Yeah, I wasn't able to switch to that quick enough. Like I would have had to have multiple tabs open.
Yeah,
So
yeah.
I was just looking today to start trying to
So if I saw
understand that a little bit better.
puts rising, I would probably assume puts were being sold. And if I saw calls falling, or like call delta falling at that strike, then I would probably assume that short calls were being closed because they've gone in the money.
Yeah. It's definitely so. Like the thing about delta and gamma too. I mean, they are highly dependent on spot, right? So the change in spot price, especially on the net outcome, is going to be much more influential than repositioning. But in the event that a large position comes in, yeah, you would see spot not change much and the delta changing on an individual strike. Yeah.
Yeah, sometimes on really aggressive moves, usually you'll see gamma move a lot more than delta, but you'll see spikes in gamma to like the upside, like positive spikes, or spikes in negative gamma on a downside move as price moves down. That can show you that like people are piling into the continuation. And like Vana and Speed will be a little bit more sensitive to that than Gamma and Delta will be. So you might see like a change in Vana with like fewer contracts than it would take to see a significant change in Gamma, depending on the vol or Speed.
Well, so if you look at the strikes on speed that have the highest, like, you know, I guess isn't the best way to visualize it. Yeah. No, yeah, that makes sense.
Okay. All right. No, thanks a lot, guys.
Yeah, no problem, man.
It gives me a lot to think about.
Okay.
Don't forget, look at Greeks by strike when we're approaching those flip points, and report back with your findings.
Will do. Thanks, guys.
Later, man.
Yeah. Thanks for the questions, bud. Those were some good questions. Only Jesus, the Lord rewards puts.
Hi guys.
What's up, man?
Oh, Nitu's
I got
here.
Hey, this is the
Don't
thing.
sound so excited.
Hey guys.
I hope you heard that eye roll.
I felt it in my plums.
Oh, good.
I
'cause that's
heard
what I
it,
was
and you need some eye drops.
You only okay. That's insider knowledge because I told you about those spreadsheets.
Mhm.
No, this is the thing I was messaged you about actually today-ish. About the the flips and kind of the end of it. So this is kind of just a little theory I'm playing with, kind of in honor of our dearly departed. I'll make sure I get his name right, but get him stuck on the screen. Yeah, JLW18.
Mm.
So end of day, 15, 10-minute end of day. Because so what I've noticed, there's often a jump, a little jerk, right at about 10 minutes to close. And since looking at the live data with Gammastrike, there seems to be, it's not 100%, and there's other things that play, but if we are below
Stop trying to
flips,
excuse your bias and just dump it on us.
I'm getting there.
Alright.
It's all about the buildup. Gosh, subtlety, grace.
Let me get a
Come on.
beer.
No. So if we're below, as we're in that 15 to 10-minute frame time frame to close, and we're below the flips, there seems to be a tendency that jerk down, or the jerk will be down, and conversely, if we're above the flips, that the jerk is more likely to be up. There's other things that play, and if we're kind of in between or near them, kind of like yesterday, it's like that's when your butterfly Gherk finished at basically max profit.
You mean the one that I called an hour before close?
Yeah, the one that I didn't miss, that call that I missed because I was in meetings. Yeah. Not bitter or sour about that at all.
Yeah, no, it was just like 700% on risk. No biggie.
Yeah, no. Anyways, now, I mean, if this little theory I'm cooking up is completely wrong or bumpkiss, like please let me know. But
It is.
but if there's more to it,
Huh? Oh, I said it is, but I want to hear it.
I just told you it's like it's looking at initially like where is spot
Where we
you
are
know,
relative to the market maker's
flips.
neutral
Wait,
point.
okay, wait.
Yeah.
Okay, can I try to distill this really quick?
No,
So, just so make sure I'm understanding correctly, so if we're below the flips, you're buying calls, and if we're above the flips, you're buying puts. Is that what I'm hearing?
inverse that.
So if we're below the flips, you're buying puts, and if we're above the flips, you're buying calls.
Like the MM's trying to get back to the neutral point before close.
Well, no, that would be the
but-
inverse of what I said.
Yeah.
He's saying we're not reverting to mean. He's saying we are diverging from mean.
That's
Yeah,
crazy.
because one side is overweight from the other. It's not
Okay.
balanced in the saddle.
Okay, so okay.
But that's
this
not saying I'm not saying that's where we're going to close in relation to spot. I'm saying that's the direction of the 10-minute to close jerk.
right. I'm trying to boil it down to puts or calls for my own walnut brain to understand better.
So today was a nice like 200% on puts. You know, and I'm trying to remember. I don't do this every day because I don't always have time. But and and yesterday was a good example with Gherk's butterfly call that he predicted. Like
that butterfly
Nostradamus.
call is so sick.
It was ridiculous.
That was pretty awesome.
It was
yeah.
great.
I think it might have been like 2 hours before close, actually.
Honestly, 2 hours, 30 minutes. It was a sight to behold. I was rooting against you actively, but I'm still impressed.
I was still like
okay,
40 cents off at the end of the day. I mean, I'm not perfect. Just really close.
Really quickly, I need to do this for JFresh. I don't think he's in here, but if he was, you were saying jerk up and jerk down, and there is a joke there. I'm going to throw it out about jerk off being a thing. So
yeah,
Yeah,
how do you know when the market's going to jerk off?
yeah, this is so I think Nitu is actually touching on a pretty interesting topic, right? Because what he's really saying is that there is some sort of he's saying that there's some sort of hedging imbalance, to the point where, the market maker is having to hedge off certain things that, they do not want to have on their book going into close because they don't have the liquidity to do it in after hours.
So, yeah, somebody at 10 minutes to close consistently, they are either closing sold puts, I believe, or sold calls, to avoid risk. And I think so. But like you see, like it's not a predictor of where it's going to close, because you saw like today after the 10 minutes it barcoded around and actually finished slightly up from there. But it's that direction. It's basically it's the 10 minutes to close bar, the direction that it will jump, and sometimes it jumps really far.
I mean, you're really looking at I bet that's just last minute positioning on index options and, maybe futures to some degree, taking advantage of the liquidity. And there is going to be some net imbalance in that. I'm
gonna to extrapolate this a step further and just talk about what he's actually seeing. And that's that you have sold puts at 55.10 and you have sold calls at like 55.20, 30. Right? And as price touches like 20, people are closing the puts at 10, which pulls price down.
Mm-hmm.
And then when it touches 10, people are closing sold calls at 20, and it's pushing price up.
Well, today, yeah.
Yeah. I mean, this has more to do with what you're looking for. And I understand it. I'm not going to give you what I think, because that's gonna skew your opinion a bit.
But Jeff doesn't want to destroy his own ARB.
Yeah, I'm not going to destroy my own ARB, but I will tell you that what you are seeing is relative to is more relevant for the strikes near spot than it is where the is neutral.
Okay.
Now, if we're very close to where the is neutral, what you're probably going to see is that the just hedges off being forced into a positive or negative environment. So if we're like right in between like the gamma flip and the delta flip, you'll see the like a little more aggressive in keeping everything flat.
Yes.
But outside of those ranges, they don't give a shit. Now, sometimes you'll get like a 3 or 4 or 5 sigma move in like the last 10 minutes, which should probabilistically be nearly impossible, but it happens, and that's more to do with longer dated positioning than it has anything to do with intraday positioning.
Like the collar roll at the end of Feb.
Yeah, because you assume that the market's going to close one place and open another, and the wants to be hedged for the next day or the next 3 days, the next 4, and if there's a big gap in that hedging, you may see the more aggressively push to get to where they're a little more balanced on their books going into the next market open. And that's especially true when you get towards really big data sets and you have a lot of neutral positioning on either side of spot. And the will want to kind of try to balance that out. And sometimes that's when you'll get like those like pre-CPI, where sometimes you get those like big end of day squeezes, or pre-FOMC. That's why you see that kind of behavior on those days.
Yep.
Is because the imbalance is actually like day over day or day over the next 3 days, and that's what the market makers try to account for. They don't really give a shit about the gamma dying into the end of day on 0DTs generally, unless it's really, really high. And also the behavior that kind of influences that is like if there's a lot of positioning that is out of the money, like dead positioning, like say everyone's buying a lot of calls, right, but price isn't going up. If those calls are tested, the people that were buying them are going to rug spot because their call went in the money, and vice versa. And so that's kind of what you see at the end of the day here, and what you most commonly see at the end of the day is that like a level will get tested, people at the opposing level will close out because they're profitable, and then the profit taking swings things back to the next resistance nearest spot, and then you get the reverse action.
Yep. That
I'm picking it up.
Fucking nails it.
Yeah.
Cool.
Well, I hope that answers I hope that explains what you've been seeing at least a little bit, or what you're trying to extrapolate. Obviously, there's a ton of layers to it.
I will say something about JWL18. He was a beautiful degenerate, and he did a lot of things that nobody should ever do in their trading, and managed to make a lot of money, but it wasn't because he was picking great trades. It was because he was very, very strict with his risk management. He would not accept large drawdowns. He would not overhold puts and calls. He would cut them and reposition accordingly. And his end of day gambles, which very frequently were like strangles or straddles, and the environment he was doing them in was very beneficial at the time. But he was only risking like a very small amount of his total profits for the day.
Yeah, he was only ever playing with house money. Knows a percentage of house money too. It wasn't even like all the house money.
No. My little end of day fund plays are small. So like 200% sounds like a lot, but it wasn't notionally a lot.
He was a great example of being a like sub 50% win rate trader with risk management that ensured his winners were significantly greater than his losers.
Nice.
And
Yeah, that's the poker side of it, right?
yeah,
Chip management. It's huge in poker.
that's huge in trading.
Yeah, it's the same thing. I mean,
Yeah.
you're really doing probabilistic bets. I mean, ultimately, you need to treat it like a poker game.
Cool. Well, thanks, guys.
Yeah.
Yeah, for sure. Yeah, it was a pretty cool little concept. Got us into a rabbit hole. Well, we got Ben next. His hand's up, but I think Gherk is dealing with something, so it's time for me to tell a story. So one time I saw a mountain lion while I was mountain biking. That was crazy. It was pretty close too. We had to ride faster because it was like something in my head said we could outride this mountain lion and out endurance it, but I know in reality we couldn't. Oh, that was an accident, Ben. Okay, well, we lost one. I don't know I don't think it was. It ran across the trail like while we were riding downhill. So like we were going pretty quick, and but it like we just see this brown streak just whoosh, right up the side of the hill, and it was like, and I just caught like I've just barely caught that tail and that head, and I was like, that was a fucking mountain lion. It was crazy. You know, he was just doing something. He or she, I don't know. I can't bring anybody up to the stage. That's why I'm sitting here telling stories. But another time when we were mountain biking, we saw a few baby bears. That was scary. We didn't see Mama Bear, thankfully, but like my buddies stopped and like, dude, this baby bears is so cute. And I was like, let's go. I was like, we ride away and we ride away fast. Are we ready for dude? What's gonna MOASS? I mean, ultimately, the real MOASS in the market right now is puts. But like they're not like actually gonna MOASS right now. It's just if there was ever gonna be a MOASS in this current environment, it's probably puts. How long until they, dude? Let me tell you something about the bond market. When it comes to junk bonds being used for leverage, they're used for leverage. It's just it happens. You get enough bonds and you throw them all in a pile, and then next thing you know, it's a nice looking pile of bonds. Bigger the pile, the nicer it looks. And so, yeah, you throw some junk bonds in with some AAAs, and ultimately your risk profile looks great. And then, you sell it. So this is happening. To what extent? I'm not going to try to speculate on that too much, but it, shit like that is what makes the market go round. Some guy needs a buck. Ugh, market crash. No. Oh, okay. Yeah. But like, I don't know. Ultimately, I mean, like we saw Volmageddon 2.0 in what was it, like last August or something. So, yeah, it would be something like that, but this one would probably have greater consequences, I guess. Dude, where the hell's Gherk? Is he choking? I hope he's not choking. Conceptualize what happens when spot passes a strike/gamma wall. Okay, so check this out. This will be kind of cool. So let's talk about a gamma wall, right? Imagine a big old, Shrek dildo of, call gamma, right? And we are falling into it, okay? Let's just say. So it's big old call wall below spot. So you just imagine this big old bar of gamma sitting there and spot's like butting up against it. So what's going to happen is as spot approaches that strike. Okay. Saber, do you mind if I finish this thought? You asked me.
Yeah, absolutely. This is what my question is kind of.
Okay, yeah. So so gamma, right, is the rate of change of delta with respect to spot. So when you have this big giant gamma wall, what that's telling you is that as you're approaching it, the rate of change of the delta hedge is increasing. So it's like the steepest part of the delta curve. You've seen delta on like images and stuff, right? I know I wouldn't bother EJ Fresh about that, but like the delta curve looks like an S, sort of like a stair step almost, but it's like smooth. That steepest point is theoretically right at the money, and so as you're approaching that point, right, the market maker's delta hedge is fluctuating very quickly with changes in price. And so they're Johnny on the spot with making sure they hedge that off. But as you pass it, right, that rate of change of delta slows back down and the market maker's hedge becomes more consistent. When you bounce off, the same thing happens. That's why those big concentrations of gamma usually lead to brief volatility and then like some sort of either a rejection or continuation of the trend.
Yeah, in our overall environment right now, things are extraordinarily negative. So you have to, I mean, like, you have the 0DT information here, but you also have to take into consideration all the information that I write about overnight, because all of that is pertinent as well. Like the total negative gamma and total negative delta on the chain, you know, the
This is
like monthly
I
and
described
weekly
it.
neutrals.
I basically zoomed in with a microscope, right, on like the ultra short term what happens, but like yeah, when you zoom out, like the context matters a lot. Like,
Yeah.
is this gamma wall really big? Like, oh, it's, let's say it's, 500 million gamma. Is that big? I don't know. The net gamma right now, let's just say, is 4 billion. Pretty big. Yeah, but if, it was something like, a million gamma or 2 million gamma, but it looks like a gamma wall, right? You contextualize those, like the sizes of those things with the overall market, and that gives you a way better idea of just how impactful it's going to be, like as a like a, I don't know, price signal, something like that.
Yeah. So, like, sometimes price will or spot will move towards that gamma wall, and either it bounces hard into from like negative gamma into the range of positive gamma. So I was just trying to see, is it like the MMs just buying all at once and driving a cover bid, or is that how the cover bid works? Or just in reaction to the whole chain, like you say, but then there'll be subsequent gamma walls, not gamma walls, but spikes in the GEX that drive the price action as well, or kind of act like mini resistances if it's like a negative deflection of the GEX, I guess, instead of being flat.
Yeah. So it's essentially so when you're thinking of gamma walls and like just concentrations of gamma, it's more important to think about them relative to the trend rather than the direction of the trend, right? Is like so continuation versus reversal slash rejection, right? It's kind of the same thing. So like, will the trend continue or will it not continue? Right. That's really when you're looking at those gamma walls, that's where the context really matters. Because yeah, if in the very, very short term, those points, right, those inflection points lead to some repositioning by market makers who happen to have contracts open at those strikes. But knowing the overall context will tell you, okay, if we're in an overall negative gamma environment and we're approaching a wall of positive gamma, odds are we're probably going to pop right through it and sit there and hold it as support, at least in the short term. And you kind of, I mean, that's kind of how I've always thought of it.
Well,
Like
it's
how,
always going to be. Remember that market participants are still going to be driven by the environment that we're in. Like, assuming market maker neutrality, the market maker doesn't need to do anything with that gamma wall unless it's breached or it's rejected. right? Like at that point where you're at a big pile of gamma is actually the point at which the market maker has to do the least. And the market becomes more influenced by what participants are doing around that strike. Now, sometimes you'll approach like a big wall of positive gamma and bulls are, selling a lot of puts and they're trying to lever price up against that gamma to get it over the edge. And then the MM comes in and helps them out. But in this environment, things are so negative and vol is so high that almost every test of like a big wall of gamma leads to everybody piling into puts at the money. and you can see the behavior live. You'll see like right now it's so extreme that like you'll see the spikes in IV right at spot on the put side. Like the second we make any kind of like when we tested the delta flip towards the end of the day, just people just piled into short puts or long puts, like at the money. They were buying the in the money, the at the money, and just out of the money puts in droves, like 3,000 net bought contracts like that. And that happened on all of our tests of big piles of gamma today. And that's because the environment that we're in, a rejection is far easier because the MM is selling the downtick so hard than it is for bulls to actually push through that resistance.
Yeah. The delta, the net delta exposure to the upside, like with changes in price, is like because we are so negative gamma, the change in delta on like calls, let's just say, is really not like it's just not there. Like if we were in a positive gamma environment, the delta on calls would be there, so that if you did a bounce, odds are you're gonna end up positive out of the end of it.
Yeah.
But and that's what makes the market go round, is that whole idea that happens. But when you get in these positions, it's really difficult without some sort of big repositioning that is so explicitly upside exposed, right? It's like those huge risk on days that we would see in like late 2022 and into beginning of 2023, where just everything goes up, like bonds, stocks, everything goes up.
Yeah,
Like
yeah, that's actually you're hitting on something really important there. Is like that's something everyone here remembers from the last year of trading is that you get a rejection from the high of the day, right? You get like a 20 basis, 30 basis point pullback. You've been sitting in your dead puts for hours and they print, right? And then that shit immediately reverses, right? Everyone's just buying the fuck out of that dip. We're in the opposite environment now. So when we get that high test, everyone's buying the shit out of the puts. Yeah, because the MM's so negative gamma versus positive. They can, like, the MM is going to just dump into those puts as they go in the money. And because they're buying the in the money put and the out of the money put, they're forcing the MM to just start dumping. And you see that on like the test earlier in the day around like 1240. You see that at the 1025 high test. You see it even at the end of day test, like 1503. Or like 302 when we got rejected off of the delta flip again. I mean, you see it every time in this environment because the only way to get substantial upside or to break that delta flip and push through that positioning that comes in is it has to be like event driven to some degree.
Yeah.
So why were bulls able to bounce so hard off of the 5,500 level?
Because vol's fucking stacked. There's so much delta. Like it's so like okay, so the biggest thing about right now versus like let's just say 2023 when vol was like like VIX was at 13 or 12 or something, right? The difference between then and now is that the IV smile, you think of it like a V, right? Like in that angle on the V back then was really, really tight. So your V was like a really sharp, like a blade, right? And now the vol has expanded to the outside strikes where variance has increased and no one really knows where everything's going. That V is slowly shaping into more of like a U shape, right? Like it's just bending like that. Just to give you a visualization of that. And what that means is that the contracts that are further out of the money that back in the day may not have had much impact on, overall hedging by the market maker now has a more outsized impact. And this is way more impactful now. So like when the bulls bounced it right off 5,500 today, it was a huge bounce, right? Like in terms of like when we think about 2023 numbers or something like that. But with IV where it's at, ironically enough, that bounce was priced in. So, and that's why it got rejected, because ultimately it bounced up to where it was going to bounce up to, and then it fell down instead of another wave of positioning coming in to say this is where it's going to be. And once that happens, then the continuation can happen. But so in short, a lot more contracts are a lot more expensive and a lot more sensitive to changes in both spot price and implied volatility, which means that market maker hedges are fluctuating rapidly, and they are fluctuating by large magnitudes. So when you see a bounce, that's why it's, the 20 bip candle in 5 seconds, that kind of stuff. I mean, the hedges are just changing really quickly, and that's why spreads have blown out on everything. That's why gaps are so prevalent in like NDX. It's all connected to just like how the probability distribution of the options market at the very least has been pricing in more risk, more directional moves, more variance. I hope that helps.
No, it does. It does. Thank you. I was just like trying to figure out if that causes the cover bid, the strong bounces off
It
of
could.
the
It could.
spikes.
Yeah,
It can,
it's definitely possible.
I mean,
But that's another
generally,
time that happened.
you want to kind of look out at delta. We were kind of talking about like where delta goes positive earlier. As that positive delta starts to move in the money, you're gonna get like a stronger cover bid. But these big piles of negative delta moving in the money will also drive that. The only problem is that you run into the same situation at the next strike. Whereas when delta is turning positive, each strike kind of starts to pick up into the other. So you start to get a lot more momentum if each strike has positive delta than if you get a negative delta strike in the money and then the next strike $5 out is also negative delta. Because in this situation, you got to fight through each layer to the upside and hope things don't reverse back. But all the market participants are encouraged to drive price back the other way. So you've got to really fight against a lot of downside pressure. But once delta breaks back to more positive delta, or like big concentrations of delta start going in the money, then you'll start to get like momentum on the buying delta. So the MMs, basically what's happening is the is going and they're buying ES contracts, and you'll even see like the spike simultaneously in like the ES market.
Got it. Thank you, guys.
Yeah. Thanks for coming on.
That was great. I think we touched on some good stuff. Something that's like a fundamental concept, I think, that would help a lot of people understand the options market a little better is understanding IV. JFresh harps on it all the time, and he's absolutely correct too. The IV curve, right, dictates the amount of risk the market maker needs to price into their book. So it's worth looking at. And when you watch like something like the live gamma curve, like that like yellow line, I think it is on the live data. Yeah, it's the green line on live data on the bottom right.
Yeah, this one.
Yeah. Like that is primarily what I'm talking about. So as the IV smile like widens out, that bell curve it becomes more wide, right? And what that means is that, your changes in delta are going to be bigger for strikes that are further away from the money. So that's just, these huge moves that we see right now are because IV is elevated. And because IV is elevated, you're kind of compressing the smile into this, sort of a flat, stupid shape.
Why is chat dead? Oh, because you joined it, JFresh. It was fine up until you came in.
He's not even listening, I don't think. I don't see him in here.
He's in there. He's in the chat right now. He was like,
he's in the chat.
He was like, "What's up, guys?
Still
Still think you could magically understand options if you just ask one more question?" He's intentionally trying to undermine us.
I see. Well, he's not. No, he's not in the audience though. He's not even listening.
I've literally never even noticed the green line before. You'll see it gets very bumpy towards the end of the day when color, when you get more color.
So the Gex is, think of it like Carl's Peener, okay, and he has jumped into.
It only gets hard after his wife is done.
As his wife gets closer and closer and closer to being done, his Peener gets more and more pointy. Right? So you go from this real flat thing where you're like, I guess there's a Peener there, to the point where it's a real pointy little pokey boy.
Carl not even in here catching strays.
But that gamma curve, right? What you're looking at there is the short dated one. But that gamma curve dictates a lot of the size of moves. And then those like pockets of gamma, like Saber was talking about, those sort of define where you're going to sort of meet those, like, I don't know.
We're talking about the significance. Somebody's asking about the significance of gamma neutral being over delta neutral. It matters. It matters a lot on indexes.
Yeah, I mean, I think the spread is more significant than the.
Isn't it like isn't it just an example of like skew on shorter dated positions? I mean, like, given how everything's calculated, it just seems like it's showing that a lot of out of the money positioning is shorter dated relative to the longer dated delta.
There's
or nearing expiry.
There's probably a bit of that. I mean, but ultimately, like,
on some equities, they can get really weird.
Yeah, them being near each other though is like theoretically perfect, right? So I would say that if they're near each other, that's probably an indication that the market maker is very neutrally hedged. If they're spread very far apart though, then the market maker is probably carrying some weird net hedge.
Oh, it's not just GN over DN. Look at, well, okay, so first of all, this stock has like 15 million delta on it. So that's part of the problem you're seeing, is that like there's like 4 strikes with OI, and all of that OI is right at the money. So there's like a lot of out of the money gamma, which, so the neutral and max point of gamma are very close together. But this is like a very illiquid chain. We really need a ranking system thrown in where we just do like a couple basic calculations and make a simple ranking profile for like how much of the tail is wagging the dog on each stock.
I mean, we could.
It's so simple to do. Yeah.
Yeah. Well, there's a little bit of storage that has to happen, but yeah, it's pretty straightforward.
Yeah, I mean, what, like a table?
It's one number per stock.
Yeah, I think we could do it with like a combination of historic vol and like delta as a percentage of market cap, and make it pretty easy to rank them.
Yeah, no, there's ways.
I do know that we need to do some sort of volatility adjustment, because delta as a percentage of market cap on a stock that has like 300% IV, could lead to, could be something that's very influenced by its options chain, despite not having a lot of delta.
Yeah. Yeah.
Or things like
I
NVIDIA
don't
where
disagree.
options volume is so high. I mean, NVIDIA's total delta is like usually like 3 or 4% of its market cap. But it's super heavily influenced by its options because there's so much options volume.
Yeah. Yeah, we can argue about that.
Yeah,
there's a
we'll
million
figure
ways
something out.
to skin that cat. Well, did we answer everybody's question? I think we did.
It can't be. Are we? What? We're done already? It's only like 10:25. What the fuck, people? Get your hands up.
I mean, need to.
I know you're not all rich yet.
It.
There we go. We got
All
Moped.
Right. Fuck yeah. What's up, Moped?
Moped's up here like every week. He's always got good stuff.
He's gonna get an A in the class.
Yeah, hoping to get an A in my portfolio balance, but you know.
Wait, are you on? Are you moving on to? I thought you were paper trading still.
Well, so I was paper trading straddles, and it was inconsistent, but it was basically going up, and then I switched to live money, and it's just been sort of inconsistent. So not losing a lot, but not really making anything either.
I mean, if you're playing straddles, that's ideally what you're doing, because it's like the whole idea is you make a little, make a little, lose a little, make a little, lose a little, make a lot, lose a little, make a little, lose a little, so on and so forth, right?
Yeah, and the thing that's really spooked me in the past, that's really burned me with like live cash, is the vol crush. Like if you don't get a large enough move, and all of a sudden the position's down like 10%, and what I've been trying to do is more condors, like say like strangle the long legs like 10 wide, and then I'll sell like a short leg like 50 wide on either end, so at least kind of hedging off that big loss, and then I try to leg out of them. So that's been kind of the approach I've been trying.
So like an inverse condor?
Yeah,
Okay.
Yeah, short condor, yeah.
The problem
yeah.
The problem with like short butterflies and short condors is that they benefit a lot from decay. So if your legs aren't super wide, it's really hard to hit profitability the same way that you would on a straddle.
Yeah, your risk profile is much more flat.
Because I mean, like I do straddles every night, and like my first inclination when volatility moves to like a lot higher environment is like, oh, I'm gonna switch this to inverse condors or inverse butterflies, but you've got to go really wide on those legs to the point where you might as well have just bought the straddle. Otherwise, you don't get the option to like close out on that like opening run the way you do on a straddle, right? Because like this morning, last night's straddle opened, like we opened up, it was in the money, like $30. We were right at resistance. Like it was really easy for me to just set a stop on my call side, and then we break out. Awesome. I keep making money on the calls. I closed the puts. We got rejected, so my calls stopped out, and then kind of just waited on the puts all day as we drifted down, and those ended up going like $60 in the money, and that's something you can do with an inverse butterfly. It's really hard to do with an inverse condor, but you really need price to like stay pinned to that lower range. Like you don't benefit from legging out nearly as much.
Well, I think his intention is more so to hedge off like the losses on a flat day with straddles than anything else.
Yeah. But you can do that. Like you can do that on you can do that on a regular straddle at open. So if you get pinned, like if you open at like a major strike, right, and then like there's big piles of gamma, like say we open at like 5,600, and there's a big pile of gamma at like 5625, and a big pile of gamma at like 5675, and it looks like price is gonna get pinned to the major strike. You could just open up your short, like the short position there, and you could turn it into a butterfly at that point. Like you can just turn it into a 5600 butterfly. However wide you want, right? And just let it decay throughout the day.
So, so suppose that, you know, it's just chop overnight, and let's just say that the overall position of that straddle or strangle is down, let's say 5-10%. Then at that point, you're saying that if it looks like you're gonna get kind of stuck somewhere, then you know do the hedging with the short legs. Like say it's 50 wide on the short legs.
Yeah.
That's the optimal time to do it. Is that correct?
I think so, yeah. Especially if you have like it depends on how much theta you're buying on your straddle. If you're doing like 3 DTE ones, which is like usually what I do, then yeah, that's the optimal time to do that, because you can sell the 0 DTE position against it, and that will offset your theta decay throughout the course of that day at least, right? By kind of creating a calendar, and then you can see if you get the bigger move like the following night. Or average down and prep for the next move. But we're not in an environment where you're running into that like ever. Like I mean, we've got 150 point intraday moves and like 80-90 point overnight moves every day right now because vol is so high. So really the hardest part about managing those in this environment should be like, where do you close them, right? Is this going to continue? And understanding like your trading levels and where resistance is and the importance of rejections is going to make you a lot more profitable opening long strangles or straddles here than than trying to like managing off risk like that is definitely something that you run into far more in like a low volatility environment where the straddles themselves are very cheap, but the probability of getting a large or outsized move is very small.
Yeah, that makes sense. I think I will give that a shot and just say, all right, we got all this volatility. Something's gonna print at some point. Just kind of hang tight.
Yeah.
And so what I've been doing is I think like Monday, Tuesday, I'll get the Friday expiry, but then like on a Wednesday or Thursday, I'll get the next Monday, I guess, because that's your options either like 2 DT or get 6. And I guess I err on the side of a little bit more theta, even though it costs more.
Yeah, so generally Fridays I buy like the next Friday.
Oh, okay.
So the weekend doesn't kill me too hard. And sometimes Fridays I'll also sell the legs over the weekend. So like I'll sell the 50 wide and then I'll close those at market open on Monday. Unless it's moved really far, right? And then I just close the spread and get fucked. But that can be a good time to like reduce your theta decay because it's really not great to carry it over the weekend anyway. And so, if you sell the legs on the 7 DTE on Friday, when it opens as a 5 DTE on Monday, you're not in that bad of a spot. Like any drawdown you've taken due to decay is really minimal. And then during the week, usually I'm opening like 2 or 3 DTE. So like Monday, probably 3. Volatility plays a big role in this. Right now, I've been opening 0 DTE ones, or 1 DTE the prior day because vol's so high. You just can't. There's no reason to go further out. And then like by Wednesday, I'm probably opening the Friday. Thursday, maybe I'm opening the Monday, but I'm probably also opening the Friday. And then Friday, yeah, I'm usually going further out. Sometimes I even go 2 weeks out on Friday. So like I'll go out to the like next OPEX expiry because the liquidity is better and you can get the AM contracts.
Gotcha. Yeah, I haven't done the Friday expiry. Well, I haven't straddled on Friday nights in a while just because of the extra theta. I feel like let me try to get a bit more consistent with, during the week, and then I can try to do that later.
Another mistake I see people make a lot is they they try to overmanage the straddle. Like they're trying to maximize profitability on both legs, and like it's really nice when that happens. But the vast majority of straddles that I open just get closed out. Like I'm not trying to manage off the put leg. I'm just closing everything because I'm like the overnight move is more than enough to cover any loss on the other side, and it's already profitable. And so just remember that a lot of times, it's like a 1 or 2 or 3% yield a day versus 150% returns the next day. Not that there aren't opportunities for that to happen. There are, but it requires like managing it in that way to try to maximize profitability on both sides requires a lot of different things to happen. Like one, your range really can't be broken, but you also need to move to the top of that range or bottom of that range in the overnight. And like there's like very specific conditions where yes, you can print both sides of the straddle really hard, but you need rules to hedge off all of the conditions where that doesn't happen and where you just make 4%. You're perfectly happy with that.
Yeah,
and if you can make 1 to 4% a day, your compounding is fucking nuts.
yeah, definitely. That's the goal. It just freaks me out when the position is like down, 4 or 5%, and it's like, okay, how do I rescue this? So maybe it's a psychological thing.
You just have to wait. Usually, I mean, the market will move, and you're delta hedged already. Right. So you just have to be like, oh, there was no overnight move and just be patient, And then obviously, there's some benefit to getting them prior to big data sets and stuff like that, where you have a lot more potential for volatility. Right now, because vol's so high, you just have to wait. We're going to get $100 move one way or the other at some point. We're not in an environment where days are very flat.
Yep.
Nice. Thanks. So that I actually did have a separate question that I was going to ask you to start talking about that stuff. That was a lot of information.
No problem.
Thank you. So the actual question I had in mind, it's kind of tied into some stuff other folks were asking earlier. So you were talking about how the MM moves are much larger because of the way they hedge against they hedge with the downtick and against the uptick in a negative environment. So my question is, does that make it more likely that we're going to exceed the expected move to the downside on the intraday? Because that's happened a couple times already this week. I think it happened last week also. Is that just going to be a much more common thing?
So that's also a factor of you know how every night in Pickles Picks I talk about like the spread between SPXW and SPX.
Yeah.
So there's a reason for that. When the spread favors the weekly chain, there is an opportunity that is opened for selling short dated volatility, but because of the risk right now, bulls don't really want to step in to sell that until the entirety of the implied move is realized. Right? Because once the entirety of the implied move from the prior day is realized, then it's a lot safer for them to step in and sell volatility. The risk is significantly reduced. Whereas, if we drop 50 points and they start selling the shit out of puts, there's a really good chance that we just fall into the puts they sell. And so, our strongest bounce today was right at the bottom of that SPXW implied move. And that's where we really started to see them lever up the short puts quite a bit below 5,500. But they didn't really want to sell puts before that. And so, and the opposite is true when you have a little bit more of an implied move on SPX. Then they're encouraged to sell the longer dated volatility and not the near dated volatility. And so, you kind of get a situation where they're not really, especially in this environment, where they're not really selling vol at all, and you kind of get like a bearish trend day, which we got anyway because we dropped so hard. But something to pay attention to in regards to that.
So, given that, do you think it's good to look at the expected range for SPX and SPXW separately, or just kind of stick to the average of the two that you do and pick those picks?
I mean, so I put the average of the two on the chart, but I do look at them separately. So, like, right before I post the chart, I usually post the implied moves for each chain, and then kind of discuss the importance of the spread there. Because remember, on the monthly contract, if they want to sell the monthly contract, they have to sell the AM expiry on March 21st. They can't sell a 0 DTE on that contract. So, if the implied vol is higher going forward, that's more bearish, but it's going to attract sellers further out. Whereas, on the shorter dated chain, you're probably not going to see as many people selling because the arbitrage is with the longer dated puts. And then, vice versa. When the SPXW 0 DTE implied move is higher than the longer dated one, you're probably going to see more selling on the zero, like the 0 DTE puts. But, they're not going to, because of where volatility is relative to historic vol, they're not really encouraged to do that until more of the implied move is realized.
So yeah, it seems really interesting. So the bulls, they need to sell vol, they need to sell puts to try to rescue themselves, but they really can't. But they keep trying,
Yeah.
and there's part of me that thinks, can I sell in the money bull put spread? Say it's like 7.50, $7 50 cents credit or whatever,
Mm-hmm.
and capped, but it just really seems to just hover around that price forever, or you just get the max loss. I've been trying to play with that strat a little bit, but it hasn't really worked out. Even trying to like play against like the flip points.
It's the levels you're choosing for playing that are really, really important. So, like, on our first test of 5500 today, if you'd sold like a 5505, 5515 spread in the money, you probably would have gotten like $6. But yeah, very good chance that would have gone completely in the money. But if you'd sold the 5500 spread as many as you want, would have closed at the end of the day out of the money, right? So, I mean, you don't always have to lever up like the in the money bull put, especially in this environment where things are more prone to failure. Sometimes it's better just to identify where all the other bulls are willing to sell puts, and then, either leapfrog them and use them as your risk management tool, or sell alongside them, like, join them, right? Because you can't beat them.
Yeah.
You can, I mean, yeah, you can sell in the money spreads. Those are great if you actually get a reversal. And they're very low risk relative to a call. Especially given that calls are like fucking $10, $30 out of the money right now. But also, you still have to determine where bulls are most likely to sell vol in this environment, and that seems to be lately, they're kind of unwilling to sell volatility until the market maker needs to hedge their tails, which is the most advantageous point to sell that volatility. And unfortunately, that's at the bottom. That's at the bottom of the implied move.
Yeah, like I didn't do any of that today, but I was watching around the JPM collar. So I was thinking of, doing a 65-55 bull put spread.
Oh, okay.
And watching that chop, let's see, from like 11:30ish until almost 1 o'clock. It seemed like, there was consolidation. The bulls are trying to get a little bounce, but they eventually failed.
Yeah, so those puts at 55.65 and 55.50 are super, super fucking bearish. Like even just getting close to them will suck price into them. And once we lost 5,600 this morning, or failed to regain it, we lost it in the pre-market, but when we failed to regain it intraday, that was the end. That was the end of the day. We were going down and down hard from that point forward, because there's so much fucking delta on those. There's 40,000 bot puts that, plus everyone else that's piled on top of that same positioning at that strike for the end of the month. And that delta is massive. And when that delta goes in the money, there's no getting back over it again. Not really. It's really, really hard. Because every downtick, that delta is going to move up. And and then also, the passage of time is moving that delta up. So it's a bitch.
Yeah, it really is. I'm just trying to find, small victories day by day, or at least try to find small opportunities and hope they compound eventually when I'm right. Not there yet, but hopefully getting there.
So earlier this morning, I wrote, implied move still favors the shorter dated contracts. That means if event vol falling off presents an opportunity for bulls, but once again, they may wait until more of the implied move is realized before piling into those positions, right? And so the implied move to the downside at the start of the day was 1.42%. And if I pull up TradingView here, which I think I can do, I think you guys can see that. If I pull up TradingView here and we look at the intraday, and we look at the SPXW range, right, from market close yesterday, which was right here, and we go to here. Is that where we closed yesterday? Yeah, I think so. That's 106. So we went 168 points to the downside before anybody was willing to sell any substantial volatility. They tried here at 124 points, which was roughly the entirety of the move, but it failed. And then it wasn't until we dropped even further down to 168 points to the downside before they really started to sell quite a lot of vol. So you've got to wait. If you want to sell puts, you've got to wait for that move, or sell calls.
Yeah, maybe I need to do that again. I got burned a lot last year trying to sell bear call spreads, and there was always some afternoon pop that just totally buried me.
That's because you were selling bear call spreads in a positive gamma environment.
Yep.
Yeah, so but we're in a negative gamma environment now. So bear call spreads are really, really. I mean, you could have sold a bear call spread in any point in the first 3 hours of trading today, and it would have closed out of the money, even if you were selling at the money ones. And that was largely true for the last couple of days.
Yeah, that makes sense. I just keep thinking, okay, the bulls really have to, pump the fuck out of this before OPEX. Otherwise, they are very screwed.
They do, but they also may just be very screwed. Everyone. This is the psychological problem right now. Is everyone's been abused by the bulls for so long that they think that the bulls have some kind of supreme power, and really what they had was a really advantageous environment that was easy to leverage, but they don't have that environment anymore. And so down here, bears rule, and we're so far from the big piles of in the money delta. That big pile of sold put leverage is still after today, 7% away from us. So if we go look at like options macro, right?
Fuck yeah, I was about to bring that up.
So if you go look at like the options macro, the peak of that put leverage is 1.073 out of the money. So that's 7.3% to the upside. And that's where bulls start to get things back under control. So they've got to climb, at a minimum, like 5% right now to the upside before they're even remotely stable. And we haven't been in this position, so I know we haven't been in this position since like 2022. So I know people aren't used to it. Well, I guess end of 2023, but mostly haven't been in this position for a long time. Yeah, they're in a really shitty spot. They do not have the advantage here. And so, tests of upside resistance are significantly more likely to fail, and that the probability of that increases as you move below GN and DN on the monthly or the weekly, and then even more as you move below GN and DN on the monthly, right? And right now we're way below delta neutral, right? So there's a ton of negative delta to the upside of us that's just pushing down even more, and it's decaying. So there's this constant uptick of in the money put delta that's just constantly pushing price down because there's
whenever I say wet blanket, that's what I'm talking about.
Yeah, it's like a wet blanket, but you're also being waterboarded.
Yeah, exactly.
So it's you've got say 500,000 in the money puts sold, right, that are all decaying up to 1, and like individually, yeah, that change in delta is really minute, but when you have half $1 trillion in the money puts decaying simultaneously, that's like 40 billion dollars of pressure on every downtick.
Yeah, charm.
Yeah,
charm is a real pain in the ass.
Yeah, and so all of those OPEXs where we went into OPEX and charm was super positive, and we're like, charm's gonna lift this, and we fucking just like pumped like a rocket into the expiration, and then all the delta fell off, but then bulls still managed to stabilize it. That's when charm was working for the bulls, but now it's working really, really heavily against them. So the opposite is occurring, right? We're pushing down into the OPEX because they can't get it up.
Yeah. This is yeah.
God, I love this shit.
Thing about context. Yeah. It's been a long time coming. I mean, what's interesting though, something to note too from this macro page is that when you look at the contract values, I mean, nobody's really backed out, right? Like nobody big has backed out. And I think at that point, that's when we're going to start seeing things get actually pretty spicy, if that happens. So that's, yeah, we're in a really cool spot. I mean, it really is anybody's game at this point.
Actually, NW, even if you look at the worst parts of August, we were never this far. Like even when we almost flash crashed, that was the closest we came. Like when the market almost flash crashed, that was the closest we came to being in the situation that we're just stuck in now. But immediately after that flash crash, things recovered, right? And we were still to the upside of that put leverage almost the entire time. We slipped back a little and bounced, but we didn't really lose the peak of that leverage. And that's the kind of dimmer line that I'm showing you there. This is the August OPEX. And you can see where moneyness. Yeah, you can see where moneyness is relative.
Net charts too.
Yeah,
just like if you look,
we can go back here. This is worse than August was. Like that was the bottom of August, right? And this is now. And we're not turning around as fast. Like
It's the consistency for me.
overall delta on puts is 3.12 trillion versus a peak of 2.7 trillion there, which is a $500 billion difference. So this is actually worse than August was. We haven't dropped as much because it's not like it's event driven, but it's not event driven like August was. August was a panic event. That was like the Bank of Japan almost crashed the market. Nikkei actually flash crashed.
Yeah.
Which nobody talks about for some reason, but it did. It was like a really, really volatile like market liquidity event. Whereas this is just like everyone's afraid and selling. Because no one knows what Trump is gonna do next.
That's when I mean the consistency of this change, right? That's the part that to me is really interesting. Like the August thing, you see like a big old boner pop up and then go away. But here, what you're seeing is a very clear trend.
Yeah, I think we're like going into a bear market. Like this is.
It seems like, yeah.
Yeah, this is not. I don't think this is something that's going to meaningfully improve again until conditions change broadly. I don't think we're getting out of this like stocks go down, bear rally up kind of thing.
So there's worlds you can game it out, but I don't want to get into the rabbit holes of politics and policy. There's going to be bounces, there's going to be drawdowns, there's going to be all kinds of shit, right? That's the way I see it. I mean, there's going to be a point where bulls do push for an extended period of time where it's like, man, when are the buyers going to get exhausted? And
you mean August of 2022?
Yeah, exactly. And then it's just going to go back down again, right? Like, yeah. I mean, and then go up again. The stocks just go fucking sideways. I mean, like, ultimately in the long run, like medium term, 5 years, if this presidency really is that volatile, then I mean, like, sideways is the most expected outcome, and then market crashes if like, oh, someone really fucked up, right?
Yeah. The macro narrative is going to oscillate as it does, but ultimately, I think the uptick in volatility will prevent us from having any kind of. I think it's going to be persistent, and I think that persistent uptick in volatility is going to prevent us from having any kind of like stable bull market like what we had over the last year and a half. Anyway, back to Moped.
You can't see your. Yeah. Did we answer your question at some point in that?
Way more questions than you actually asked.
Yeah, right.
Yeah, like no one else is stepping up. I'm like, okay, what's a good question I could ask? But no.
Wait, Gherk, people can't see your stream on YouTube or your Gammastrike window.
Oh no. Okay.
Hold
on 1 second. I had someone at my door.
All right. What was that, Mopeds? I'm sorry I interrupted you. I just technical difficulties.
No problem. I think that did answer my question, and I did enjoy the asides and the additional lesson on the options macro.
I mean, one thing I'm trying to at least passively do is like pay attention to things that people don't talk about. Yeah. Because everything was built with intent, right? So the options macro page, like, I talked about context, right? We zoomed out. We talk about the neutrals on SPX and SPXW and all that. Like, contextualizing all of that is really where the value of Gammastrike kind of becomes outsized, right? That, the pickles picks with the implied moves that Gherk was talking about, what those implied moves signify is really cool. Like, there's a lot to it.
Yeah, the one thing I gathered on that options macro, that like bottom right is kind of the money shot of the chart because it's showing like how screwed the bulls are or where they need to get to not get screwed. So I feel like that chart kind of makes the most sense right now to me.
Yeah, I mean, you could look at that. It's in this context, it's a great chart for that. But just keep in mind that, especially like in the long term, like 5, 10 years, these curves are going to evolve as the market evolves and as regulations evolve. So I like right now, it's a very good market for selling puts, but who knows if that's going to be the case forever, right? So it's great, and I love it for that, because right now, when people are acting stupid, they're acting predictably. But at some point, right, people are going to smarten up and start to figure out how to start closing this gap. I hope. Otherwise, humanity is doomed. We're all done.
Or we're just doomed until the next bailout, and then I guess maybe we try it again.
Bro, dude, if we get another bailout, oh man, it's gonna be fun. It's gonna be fun because we're rewarding stupidity. So yeah, I'll probably if we get, I'm expecting bailout 2.0, but like if we get it, I'm just gonna buy stocks and hang out for another 2-3 years.
All right. Sorry about that.
What are you gonna do if we get bailout 2.0, Gherk?
Go long in the video.
I was gonna go long MicroStrategy.
Go along whoever the next company is.
Google.
Yeah, I'll just honestly long all the IPOs that show up. I'll just long all those fuckers for like 20 minutes and then sell them.
You just need to make good friends with like some CFOs of like the Mag 7.
Yeah.
So you can figure out what they're pumping investment money into.
Yeah.
Okay.
Yeah, exactly.
We're gonna need a loan to join a country club.
100-year bonds, baby. That's what we're doing. Let's go. Yeah, need to. That's the trick, is 100-year treasuries.
All right, we got Lawler, who's got a question. Thanks for coming out, Moped. Appreciate it, man.
Yeah, I like it.
Good
Guys,
question.
appreciate the info.
Yeah.
Yeah, Mongo? Oh, no, Lawler.
You guys hear me?
Yeah, what's up,
What's up,
dude?
Lawler?
Hey. So my question is, when we have like these whipsaws and this damn like a bear market, how does that happen? How does that occur? And what would we look for in?
You're gonna look for
options data?
kind of want to look for sell side exhaustion, which we're getting a little bit of now. But on the Greek side, hold on, let me pull up the index Greeks. On the Greek side, you're going to want to start to see VN trending down towards spot. You want to see out of the money, like sold call positioning starting to fall off, which will usually mean GN trending or GM trending down. And you can see that happening here on SPX. You're going to be looking for like the GN and DN levels to start falling towards spot as well, which we're starting to get a little bit of, right? And this is all congruent with bulls selling larger out of the money puts, and then also bears taking profit on in the money positioning, right? So kind of a very similar situation to where we hit like VN GM to the upside, and there's no more potential profitability for bulls, and so they start to take some of those profits. You can see that here a little bit on the gamma curve, although things have been bearish enough that this like bottom to the downside kind of keeps extending a little lower every day as people position to the downside more and more. But overall we are seeing a little bit of a pushback, and options macro can help with that a lot. Also, you've got put leverage starting to flatten out here, right? If you look at the last few days, right? See, they're really trying very hard to make a bottom. It hasn't been very successful. And that is something that you have to keep in mind, is that it can fail, but they have tried really hard to make a bottom. And then also you can kind of look at these metrics, which are also important and not really part of GS, right? But you can look at correlation. Correlation is going to tell you a lot about interest in the dispersion trade. you probably can't look at the forward yield on volatility convexity, but I do it for you every night. Bond volatility falling can ease the environment a little bit. You want to see if skew starts to turn around. So there's more like macro stuff that you can look for if you start to see a little bit of divergence. Like we got this actually ended up moving down a little bit in after hours, but see there's like starting to be a little bit less correlation. And as correlation dives, that indicates that short vol is coming in size. So I mean, the things I go over end of day every day on the stream can be a really good indicator of that, but also, the neutrals and stuff and the options macro.
And for the gamma curve, what would that look like if it failed? If they tried to turn it around and it failed, would it just kind of extend more out or
so
something?
as it moves up, it would probably steepen. So you would probably see the gamma curve like start to hold on, let me see if I can mark this with Epic Pen. It should work. So you'd probably start to see this steepen. Like that, as it tried to move up. And then, if it failed,
then it'd go back flattening down.
Well, no, then price would just drop down that curve really fast.
Oh.
because the curve steepens, it means that the ability of price to move faster is going to increase because there's more. Every strike has a greater and greater change in gamma. Right, and so as that curve steepens, the chances of like larger or outsized moves are going to increase.
And is that why when you get a rejection, it could be like a really hard rejection and fall?
Yeah, because you're looking at this on like the intraday. So yeah, on the intraday, that's already really steep.
It's a stair step basically.
Yeah.
Oh, gotcha.
And so, when that rejects, you're just like dumping right back down. Like all of that gamma is going to fall off at once because the MM's selling that downtick. But this is the full chain out on the monthly.
Yeah. So like on a big move, right? The scales are much larger when you look at this gamma curve. And in that sense, right? This is what, at least me, I know Gherk's been noticing this too, but like the moves we've been having, they are so large because if you look at where our notional gamma is relative to spot, we're at a point where essentially a lot of the calls and puts all have more delta than they maybe should. So that means that we are going to get more out. And this it all kind of comes back to the IV curve and the gamma curve, right? How the IV curve is more splayed out, how that actually affects the changes in the delta hedge for the market maker. And that also explains why once you get to that point where gamma is really steep too, right? When you're like meeting that resistance, it's because the change in the market maker's change in delta hedge is at the highest rate. So they're busy repositioning. They're very busy. And ultimately, once it shakes out, they're neutral, but the rest of the market is not. And then that balances out. And that's the tug of war of the market, right? Between the market makers and the market participants, which a lot of the time that line is blurred because they're both. So, and I know it only serves to confuse the matter, but like the flattening of that curve is why we do experience so much chop when we are at those extremely high or extremely low zones.
Okay.
So yeah, and that's why Gherk pointed out the implied move, right? Because that's the point where, statistically speaking, anything beyond that is like statistical gravy, where it's like you are just absolutely a complete exception. You're so special. Inside that range, you're back to like, okay, this is, you're a normal guy. And when you think about it in a probabilistic sense, that's where it makes the most sense to try and do stuff. And it also is the point where the market is in the highest, rate of flux. So you'll end up with these crazy chops and these crazy bounces and all those things. And that's on the negative gamma side, right? Assuming the market is positioned traditionally. When you're in the really high gamma areas, it kind of does the opposite. When the gamma starts to increase like that, at some point you're reaching a point of minimum flux, ironically enough, because gamma is so pointy that out of the money stuff is just fucking worthless, and anything near the money is insanely volatile. In relative changes, it's very volatile, not notional. And that's where you see the market start to stall out and just kind of sit there and kind of plink back and forth. It's because, yeah, there's not a whole lot.
It's waiting
like
for more positioning or something.
Yeah, exactly. When the price changes a bunch, not a whole lot changes in aggregate, unlike in the negative gamma environment. So,
All right. Cool. I think that answers my question.
I hope so.
Appreciate it, guys.
For
Thanks
sure.
for asking it, man.
Yeah. I think it's kind of a recurring thing I'm seeing, Gherk, where like the understanding of like the width of these curves and the rates of change, right? It kind of harkens back to calculus.
Yeah.
So it's a whole lot of derivative calculus.
Yeah, like Calc 2, not...
Calc 2 and Calc 1. Calc 3, no way, but
Yeah.
Calc 2 and Calc 1 definitely like if you look at this gamma curve that Gherk has up, you take a screenshot, put it in Microsoft Paint, and draw a straight line that touches one point on the curve. I mean, that's a very important value that you've just qualitatively pulled out of your ass.
Yep.
So, yeah. Oh, Jen, you're a librarian. Fucking check out some calculus books.
Oh, yeah, because it's just, yeah, all you gotta do is just check them out.
Yeah, check out some pre-calc and calc books.
I don't know, I thought Calc 1 was a bit of a bitch, but 2 and 3 were pretty easy.
Honestly, I wish that
140.
Honestly, I wish Calc 1 was more like high level, because what it really is about, like, I never really got until like physics. It's like the line touching
The way they
curve.
split it up.
Yeah. Well, the way they split it up and then the way they describe it.
I always thought
so
Calc
like, how
1
do you
and
do
2
these
should be
things?
taught together.
Yeah. Well, like, it's mostly like, for me, it was a lot of the like they talk about it a little bit, but they don't really explain. I guess I always needed a physical analog to sort of understand it. But
Well, physics is better for that.
yeah, well, I've been a tinkerer my whole life, so like understanding how things interact is like, and how things tick is what makes me go.
So, real quick question in the live section on the live GSX page. Would it be helpful to have wicks on all those candles to denote, like, okay, it did go this high, but it has pulled back, to show changes over time, or to have a slide bar to kind of loop what's been kind of happening in the markets? Because if I have to go and do something for the wife and come back, I'm not like Gherk and he could sit on it like a hawk.
So okay, so
GSX
I see what
page,
you're
next
saying.
one.
Yeah. I see what you're saying. So you're saying like have like changes in the bars.
Yeah, just to see the flow. I don't know if that's helpful or I just need to get good.
No. Okay. So I could see it for volume. Okay, that would be very helpful. But for all the other ones, because they're so dependent on spot, that if you just looked at like Delta like an hour ago, it would look totally different because maybe the price was down 200 bips an hour ago and now it's up 200 bips. That delta is completely different.
Which is, I think, the reason that volume's also kind of useless, but...
Well, the volume, at least the volume tells you like, oh, there's this much interest. But but the derivatives themselves, like those are very dependent on things like externalities that you can't really account for with just a shifting back in time. You also have to shift back spot, right? And be like, oh, this is where spot was. And then from there, now the task is sloughed onto you to figure out, oh, well, spot was here, these were there. What does that mean now that spot is here and this is here? It is really tough, even for me on the napkin side, to try to glean actionable information off that personally.
Yeah, I mean, I think a lot of people think that, and I've heard this asked a lot. I think a lot of people think that like we just didn't, like, it was like maybe something that was hard to build, or not something that we thought of when building it. But there's a reason, like a lot of things, especially this, there's a reason that's not in Gammastrike. Like, you should be able to walk up to the data on Gammastrike at any point in the day with no historic look back and make a reasonable assessment of the local options chain.
That's fair.
And you don't, and the purpose of that is so you don't get mired in bias.
Yes.
Like the
exactly.
opportunity, and like we made a conscious decision not to have, like a historic delta chart or a historic gamma chart. And Dork's right, you could see it for volume relative to spot, right? Like, spot tested, and that might be something we do add. But I've said this before, like the value of Gammastrike is not in its ability to predict the future, because it doesn't do that, right? We don't have any forward-looking models here.
Nobody does.
I mean, they exist, but
you have probability distributions. Yeah. That's all you have.
Yeah, but what Gammastrike does really well is it tells you exactly about what's going on right now. It gives you the clearest picture of now in the options market, and that's the most important picture as a trader that you can have.
So the TLDR is get good. Okay.
It's not get good. It's just I want you to understand the importance of looking at the data that's in front of you and not allowing the rest of the data to bias you one way or the other, or historic data, or what happened 4 hours ago to bias you against positioning now, because all of that, especially on the 0DTs on SPX, is moving so quickly. It's so dynamic that if you get hung up on any like one position or one idea or one strike or a specific level breakout, in 3 hours that could be completely different. And like I wanted people, yeah, and we built this really intentionally with people, like forcing people to look at the moment, because that's what you need to trade. And if the data at the moment's telling you you're wrong, you need to close your positions. If the data at the moment is telling you, and I know you've been using it long enough that you've been like, I'm fucking smarter than this data, and then gotten burned. Because I know I have.
I haven't even reached that yet. So I just assume I'm auto dumb. Yeah. Right on. I'll appreciate it. Thank you.
You're welcome.
Yeah. That was a good question. I like the way you explain that, because you're so right that like, sure, patterns happen. They're great. Everybody loves patterns, but patterns are meant to be broken, especially in the stock market. So like you really need to, if you want to be astute, you have to look at your risk profile relative to the market, right? And that's going to dictate a lot of what's happening. Crazy.
I mean, something that we get a lot from everybody, which I think is really funny, is I want to look back at or not back at strike. I want to narrow the range of options I can look at on Greek Spy Strike.
Mm-hmm.
So they want to they don't want to just cut the further expirations out, which is what we allow for, but they want to isolate like one expiration out into the future.
That's why you click on the bar.
Well, yeah, I know. But they don't want the cumulative gamma up until that expiration. They want just the gamma, like they want to be able to look at. Not a lot of people. I thought a lot more people would bitch about this, and not a lot of people have. But they want to look at like all of the gamma from like April OPEX to July OPEX.
Yeah,
and
they want to chop off the short end. Yeah.
Yeah, and we don't allow that. And the reason, we actually have a reason for this. We argued about this shit for like 30 hours.
Oh god, dude, I was very pro chopping off the front end.
Yeah, you were, and I was very against it. And that's because if you chop that off, it's still there. So the thing you're looking at in the future is just wrong. Because you're trying to remove like a chunk of data and information that's going to be there. It's going to be affecting spot right now in order to look at something that's, you know, not correct because it's not properly weighted with the... And so, you know, ultimately we did win the argument against Doric. and we cut it out. But we did replace it with the ability to click on any candle and see the where that OI is positioned.
Yeah, it makes sense. Like and that's why I said you just click on the candle, because that tells you the whole story of what's going on.
Mm-hmm.
So it makes sense. Yeah, I that's the best thing about this site is it doesn't let you confirm your biases as easily as you could if you were just drawing triangles.
Yeah. Drawing triangles is the best way to confirm your bias.
Oh yeah, dude. I'm drawing so many fucking triangles right now.
I've been doing this so long I can make any triangle look bullish.
Yeah, man, any triangle look bearish.
Mm-hmm.
Yeah. Oh, ascending wedge, bro. It's an ascending wedge. Bullish reversal.
Mm-hmm.
Yep. Yeah, we try to really avoid that. Like, I mean, there's the most biased confirmy thing we have is probably the G scan, but that's just because it is, you know, it's looking at trends like humans do.
Yeah.
So it's not.
I mean, it's definitely looking at trends better than humans do, but
it's looking a lot more than humans can.
Yeah.
But it's still a bit of a biased machine, so you know, like it's tough. I mean, really our biggest focus, right, is just trying to make sure that what we put out is actually valuable and not, you know, just some piece of shit data to look at. If you have a specific strategy, we have something that's valuable to you. That's our, you know, that's the thing we're trying to pull off.
Mm-hmm. So yeah, sometimes some of those decisions, they're baked in. But we do always listen to you guys and try to take your feedback in stride.
Yeah. Oh yeah.
While also trying not to let you shoot yourselves in the foot.
It happens. Happens to me sometimes when I look at some of the stuff and I assume too much, and then I'm like, I just lost $200. That sucked. Someone shit on the website. I know JFresh at this point would ask for somebody to say something that sucks.
No,
So
Bird Stew's gone to bed, so this is done.
Oh shit.
Yeah.
Wait, hold on. Someone say something that sucks about the site, please. Hurry up.
Yeah, say something you just absolutely hate.
Yeah, well, like UI, whatever it is. If you're like, this thing is whatever. Okay, IV chart colors suck. Okay, now we're talking.
They do. They're almost all the same color.
Okay, yeah.
I mean,
So
that's intentional. That is actually intentional. But we do need like a colorblind version that's not red and green.
Yeah, I think we could just shift the colors up and then also widen the gradient and also have the gradient shift between two major colors.
Mm-hmm.
Like I think it would be a little better. Like a triadic gradient shift would look pretty good. And like you could do two triads to a single point, right? And then
Gamma Max. Yeah, what's the story with that, Dork?
oh, Gamma Max.
Yeah, Win V2.
we're trying to push it through the system right now. There's stuff that has to happen on the database side and everything that's got to get cleared up. We're really close to getting this thing fast tracked through the. It's running. I mean, it's doing the stuff.
Yeah,
it's
I know.
just making sure that the shit that we see, like right now, it's like saying like, ah man, I had this random TCP error. I'm retrying, and then it works. But for some reason we find out about it, and I don't really care. So it's me being an idiot with my logging. So it's weird little shit like that, and then it's going to be pushed out. And along with that push out is going to be some migration that has to happen. So
Can the live data page not require scrolling to see all the charts? Ideally, yes. And initially, right before launch, it didn't. But we had to change the bottom charts, and the ones we changed to were slightly larger. And we haven't gone back in and done like a lot of front end stuff because we've been working on getting like the WebSocket data running. So it is on our list of things to fix on the front end though.
yeah, honestly, that bottom right chart needs to be broken up in some way or another. We'll talk about it, but it's so much information on one chart that
1440p
it's
screen.
tough.
1440p screen. Look at
1440.
that's what I have. Oh, his like numbers are weird.
They're diagonal.
No, his like they get cut off or something. Like he has no strike numbers. He's looking at Fubo. Nope, sorry, I typed in the wrong ticker. Oh, weird! Look at that.
Oh, what the hell is going on there? What the?
Hmm.
That was interesting.
Other tickers work okay. What else is like $1? AGL. So it's the single digit numbers are getting like weird. Yeah, because let's see, GME's 2 digits. Yeah, so GME's fine. Apple's fine, right? SPX is fine, but it's the single digit.
Go back to Fubo for me so I can see the stark difference. Oh yeah, look at that. Okay. That's legit.
Check the zoom size. How do you zoom in and out? What's the hotkey?
Hold control and scroll the mouse wheel. Yeah.
I'm at 100%.
No, if you zoom out the web page more, like you can actually watch the strikes get all fucked up with the formatting.
They get better when you zoom in.
Yeah,
right. So yeah,
like
at 150% scale on 2K, they pop up again, like the way they should be displayed. But at 100%, they disappear.
Okay. I think we know who to yell at about that, maybe.
Yeah, I think we could get that fixed pretty quick.
Nice. Okay. I'm going to make a buggy poo thing about that right now.
There you go. You mean these? They should correlate to their historic running, like the historic period. So they all look back the number of days. These like dials, they all look back the number of days stated. So this will look back 30 days, 60 days, 90 days. I guess we could do a longer run average on them so that the gauges look cooler.
Yeah.
Like
It
look
needs-
back at the last 3 30-day
I mean,
periods.
ultimately, you just make a CDF, right? And then you just say where it is in the CDF.
Yeah.
Like, oh, this percentile.
Yeah, we could do that too. That actually, I like that better.
It seems like the way to most accurately represent what those gauges feel like they should represent.
Yeah.
And you just do the look back based on the volatility tail length. You know, it's the volatility of volatility, ironically enough. Just in a weird way.
You can turn off parts of that chart. This chart, like if you want to get rid of shit or it's too cluttered. So you can look at just GACs, like point to point. But yeah, I know this chart's problematic, and we're working on a replacement and a way to break it out. Just remember that the GACs is already over here. You don't have to look at it on this chart. Like, you have to look at IV over here. It doesn't appear anywhere else. But the GACs, that yellow line, that's over here. Like, right here.
Yeah, that bottom right chart just managed to sneak its way into production before we could really watch it and think about it.
It's got nothing but problems.
It snuck in, but
It's got like four y-axes, and it scales weird, and yeah, it's we're gonna get rid of it probably and figure out a better tool.
Page, dude.
Yeah.
It deserves a page. It really does. It's beautiful. Like the gamma curve, like that green line. I want to see that thing auto scaled, man. That thing, it would be just fascinating to watch, especially for me because I like to play speed.
Yeah.
So I would love that.
It's the everything bagel of charts. Yeah, it is. Dork doesn't do anything with the gamma curve. Just ignore him.
Fuck off, Gherk.
I mean, I'll agree that you're doing something with the gamma curve when you're buying like 100, 5,600 SPX options on a 5,500 bounce.
Just you wait till this HELOC clears. Well, those were some good complaints. We got a couple.
That's the chart I've been using the most. Yeah, I use it a lot too. There's nothing wrong with it. It's just annoying to use. The data on it's all super valuable, but it could be displayed a lot better. And we're all very aware of that.
Yeah. Are there any more complaints? I want more complaints.
Yeah, where's V2? Where's V2?
We already touched on
and
that.
I thought you were going to start sucking that guy at SIBO's dick to ensure that our end of day reports came in at the right time.
that was fucking shitty. At least it came through. I mean,
yeah, it did.
The worst, it could have just not come through, and then
it wouldn't have come through if I didn't wake up at 3 a.m. and remind Vunky to roll the pods.
Oh man, yeah. I like when I first got up, I like looked at like the run, and I was like, okay, thank God it's actually there. First time I looked at it, it was like nothing there. I was like, are you fucking kidding me?
The GACs and vol axis offsetting weirds me out. Yeah, well, they're on different axes. there's like 4 y-axes on that chart. It's a fucking mess.
Maybe 3, but I think there are 4.
I think there's 4. Because there's gamma GACs, then there's the 0 point on the left for volume, and then there's the there's the axis for the IV curve, whose bottom point should actually center at spot. So the IV curve should, like, at spot, should always be at the 0 line. How about a way to fix the Greeks by strike page range in place when you look back on earlier dates? Make it a little easier to eyeball changes there. Yeah, that's something we want to do, is have like ghost candles so you can see the change day over day. This tool's also a little bit of a mess and getting overhauled at some point, but
there's so much shit in this tool.
Yeah, this thing is a beast. But yeah, some sort of, I mean, like, you can do it, like, you can eyeball it, right? You can see where things are moving. But yeah, having some kind of like ghost candle there so you can identify like the day over day change is something we're gonna do. We're probably also going to be expanding how far back you can look more. Like, I think it would be more valuable not to just be able to look back like 5 days, but to be able to look back like 30. And that's just, data that we have to put in place and store. But I would rather get the ghost candles fixed first, and then we'll worry about adding more historic data. I'm glad you come to these meetings too, Rugus. Oh, Nuke just hopped in. Hold on, guys. Stop talking about engineering. The engineering department's not taking any commentary at this time.
Wait. Gherk. I need Nuke to hear that the bottom right chart in the live data is the everything bagel of live data. That was the best way to describe it I've heard, like, since I've looked at it.
Do you have a quality assurance testing suite, or just test in prod? We test in a different environment, and then the beta testers get the feature before you guys at on the production level get it. So there's like, we usually do like a 30 days with the beta testers, and then we push the features out to live. What we have is like, it's like a manpower issue. Like, we've got like Nuke plugging away like 100 hours a week on like getting live data services hooked up. And if you guys saw it today on stream, we're like 1-to-1 or a little faster than like WeBull and TradingView. And so that is a monumental task, but it's so important to get that in place for all of the things that we want to build in the future. And so that's what a lot of our time has been going towards right now, because there are issues with the site, but it's functional and it's still in development. But we will, like, once we get that done, we'll probably do like a big round of cleanup on like UI bugs and stuff like that, and then we'll move back to developing out the rest of the products that we're building right now. It's definitely faster than TWS with IBKR. It's fast as fuck. I think Nuke's processing like 4,000. Is it like 4,000 computations every like 500 milliseconds or something?
He's doing something. He's like 7,000 calculations a second or something like that.
It's crazy.
Yep.
And that also means greater accuracy in our flip points, greater accuracy in our volume. It means that we will have, time and sales on SPX logged for the entire day. So any index errors that occur, like you guys ever seen like halting, like trade halting on like SIBO, or where like they just stop printing data? Or you've probably seen it on CME a couple times, like during really volatile events. We're just going to be pulling the live data feed instead of using snapshots like brokers do. And so our ability to power through like outages like that is going to be way better. And anytime a snapshot is fed, we can like fill in all the blanks, so we'll have some redundancy on it as well. Should be really cool. Both, yeah, data integrity is so important to all of this, and so
Timeliness and integrity.
it
that's the
seems
two
like
things you want.
like something really boring to just have live pricing, but it's so much better than just live pricing. And then, you know,
Yeah.
that's also going to come with opening up like QQQ and SPY and Mag 7 stocks for live data.
Yeah. That's the goal, right? Is, you know, SPX is cool and all, but there's some other stuff out there that's liquid enough that, you know, these numbers make sense.
Yeah. Yeah, it's definitely going to be exciting to get all of that in. And then, you know, live update on prices, live updates on the Greek Spy strike charts, you know, all of that's going to go towards live and real-time updates.
You know what I want live, Gherk?
Me?
It's the most you're gonna hate when I say it, but I want
Probably.
this live so bad. Apple.
Oh, you bitch.
Live Apple, dude, is just like I would love to see that.
Do you just want
'Cause
to
it's probably
do you
so
just want to
boring.
just sell credit spreads all day?
I mean, yeah.
It's probably the most stable options market.
Dude, I mean, like, of all of the tech stocks, Apple's options market is just like it's beautifully well behaved. It's got the full gimp suit on and everything. It's beautiful.
Option strat clone when we wouldn't just go out and do the same thing as option strat. That would be lame. No, we're gonna make something way better. That's gonna take time.
Yeah, yeah, when you talk about things like option strat, right now you're talking about portfolio modeling, and that like we're kind of geared for it, but building out that extra little bit to be like, oh, you know, this is an option chain full of all these participants, and then you have this is my portfolio, right? Like it's there's subtle differences that could fuck a lot of shit up. We got to fuck around with, and also it is a question of manpower.
Yeah.
And the features we want to complete, right? We have a roadmap. It exists, but you know, we really got to prioritize things that are feasible, you know, that are actionable, and the portfolio modeling side of things is definitely on our radar. So don't think it's not. But we got a lot of shit to do.
I have a dream,
and
dork.
not a lot of humans.
Yeah, we need like
too, Gert.
we need like 3 nukes working in tandem, just circle jerking each other all day.
I mean, yeah. Ultimately, we need like just a you know.
Or we just
really
need someone to like hand feed nuke more amphetamines throughout the course of the day.
If we could just have Ken Griffin give us like $1 billion for no reason, no strings attached, just blank check, here you go, then it'll be good.
I just love what you guys are doing so much. Here's $1 billion.
Yeah, here's $1 billion. I don't care. Have it.
Thanks for undermining my entire existence in the market and all of my alpha. Here's $1 billion.
You would look at it and be like, "There's a way I can make money off this."
More than likely, if we ever spoke to Ken Griffin, it would be, I want to buy you out and shut down everything you've made.
No, he wants to buy us out and then understand everything we've made and then make money off it.
And shut it down.
Eventually, if it doesn't work out.
Can we get grandfathered pricing before GS hits the news? I don't understand how GS isn't more expensive. Well, we keep the margins really slim because we want it to be affordable for people. That's really it.
Yeah.
I mean, we know we're all aware that we could charge a lot more for it, but like Dillionaire, I could charge a lot more for it and probably not lose that many people. But I want it to be open to people. Like, I don't want it to be like a hurdle. I want it to be something, that people, it's not a big deal to be able to afford it. And, I want it
Yeah.
accessible. Because if it's not accessible, like, there's no point in us doing all of this. We would just keep it
Yeah.
for ourselves and use it to algo trade. Like,
Yeah, it's pretty much it. But like I've talked to Gherkin at length. I mean, really, even though he seems like a narcissistic asshole, he's actually a really nice guy.
wow. Just under the bus.
Yeah, I mean, ultimately, like, I think he, at least on some level, ascribes to the same philosophy that I do, which is where when everybody wins, right? And we're trying to sort of create a manifestation of that.
It's not because I like you guys. It's because I really, really hate hedge funds.
Yeah.
It's still a spite move. Don't misinterpret the things Dork is saying about me like I'm some sort of generous god.
Yeah, no, I mean, really, ultimately, right? That's the thing, right? There's huge institutions of participants that win all the time. I mean, even if it's just shitty little yields, they're winning them, and you're not.
Yeah, and why should they? Yeah, no, exactly. Why should they win due to a data imbalance? Fuck that.
Yeah, yeah. We want to inform. We want to provide the bottom line of information.
Or their exact pod shop models.
Exactly. Yeah, I mean, well, that's the bottom line, right? I mean, like, ultimately, like, this kind of stuff, like, really, if we can create a standard, like, to that level, then, I mean, I think we've done our job very successfully.
Yeah, and CBOE will love us because it just makes more people more confident about participating in the options market.
Yeah, and honestly, and like I've said before, too, I mean, ultimately, I have a feeling that the more astute traders are going to outlast, and what's going to end up happening is that market makers and everybody, just all the participants, are going to have a little bit more of a easy time doing what they need to do.
Yeah, deeper liquid markets are better for everyone. We're just doing the SEC's actual job.
I mean, kind of, yeah. That'd be like what we're doing is we're providing a risk model, at least a way to develop a risk model, and using that risk model, right? You are trading with the market, and in doing so, you are participating in the net benefit of everybody.
Dork.
Or you're trying to fuck everybody over like a dickhead, which plenty of people are.
Imagine giving everybody a dynamic risk point in their position.
That'd be cool.
Yeah. Ooh. I need to write that down.
Oh, I'm dude. I mean, I've been thinking about this portfolio modeling shit for like a year now. It is hot on the tail. There's so much fun shit we could do with it.
I know.
So much cool shit.
I don't like you guys, but here's all the things I'm doing for you. Yes, and worship me. That's all I ask.
Ultimately, Gherk's goal was to just make sure he didn't have to subscribe to a bunch of different data providers to get what he needed.
Initially,
so yeah. And I was like, all right, well, here it is.
It was also like I wanted to stop getting fed like Excel charts of information from you and Atomic. And I just wanted like an actual UI where I could go look at the fucking data.
Oh, right.
And we're like,
this Python
we
file
can't
the chart and it'll update.
God, the old intraday data was so fucking hard to follow.
Just close the pie plot. A new one will pop up and the data will be updated.
I'd be like, Gherk or Dork, I don't understand. Dex hasn't moved for half an hour, and he'd be like, oh, it's been dead.
Oh my god.
Some of the first iterations of all this shit were a nightmare.
They're so dumb, but We
But
ended
they-
up with something that's pretty cool though.
Yeah.
Yeah, like these dex flips, I mean, they're like the idea for them has been around for a bit for us. We've been noodling with all this shit for a while.
They're so good. Like seeing them like this on a bar chart,
And
reacting.
the scanners, dude.
God,
The scanners, dude.
I know.
Like this. That alone, we've been talking about that for so long. It's been like having at least some scanners for some of this shit. And Nuke has just knocked it out of the park.
Yeah, I mean, if most of the scanners, I think me and Nuke can turn around in like a week, like from the math and programmatic side, because it's so easy to build them once you have all the data.
Yeah, oh yeah.
I mean, we already did 3 in the last three weeks, right? Well, I guess 2. We did 2 in the last 2 weeks.
Yeah, it's crazy. And the more data we add, the more scannage we can do.
Were the tips and things always dex gags? Oh, the tips have nothing to do with this at all.
Yeah, no, tips
Yeah,
are
the
tips are still secret.
The tips are, yeah, they're still secret, and they're totally weird and esoteric. That their relevance to the market is, how do I put this?
Dubious at best.
Yeah, very dubious. Either they're like the ultimate market cheat code, or they're complete bullshit. we've never really landed on one or the other.
Just
but
wait
yeah,
till JFresh.
they're like a
I'm
really
gonna call him by making them in options market. That's gonna make him so mad.
Oh, they'd be so weird in the options market.
They would be. Oh yeah.
Oh yeah. No, we're not giving that to anybody. Nuh-uh.
No, we're not.
Oh no. Let's not. Yeah, let's just not talk about that at all.
All right.
Ooh.
Enough about these tips, guys. They don't exist. I don't know what you're talking about.
Yeah, nobody's
You're acting crazy.
What tips?
Yeah, no, there's never been tips on the stream ever.
Mm-mm. I mean, your tip.
But yeah, but that was just for like a frame or two.
Yeah. Well, it's like a frame or two in the end of day video, but people have to find it.
That's true, yeah. And only in some of them.
That was a great hat you wore on your penis that day. I think we're done for tonight. It's what, 11:50?
There's no more fucking hands. Yeah, we're just jerking.
Yeah,
off.
JFresh isn't here to like be like, I have children and a family. It's time to end this.
Right. Yeah, my girlfriend's been gone. Yeah, no, unless anyone else wants to talk shit, we're out of here.
All right. Good night, everybody. Thank you for tuning in. We'll see you all next Thursday. Maybe with a new feature to talk about.
Maybe.
Ew. Later, guys. Later, Dork.
Later, bye.